What's going on, guys? Hi, how are you? Hello. The stand is so bad, so wobbly. I keep saying I'm gonna replace the stand, but I haven't. I'm sorry. Once I stop touching my keyboard, it'll stop doing that. So sorry about that. Mm-mm. Sorry, guys. I'm just trying to get the screen share set up. I have to plug this in too. Hold on. Yeah, I know it's in a red Solo cup, but it's just a Coke Zero. Don't worry, guys. I know it's 5 o'clock somewhere, but no beers, not yet. Yeah, I know Warren Buffett told me to say that. Cheers, man. I love to hear that. Yeah. I mean, I never wanted this to be like an educational place because I don't want to waste anyone's time. Everything that I say in my journal, I think is actionable. But um, what I kind of realized over the first few years of doing the service was that obviously a lot of new people who can afford it still sign up. And like a lot of the questions I get, it's not that, I mean, yeah, I do get annoyed sometimes answering silly questions, but it's not even just that. It's more so owning stocks is only half of the equation. Managing them is a huge part of it, right? And there's no focus on that on X. It's mostly just people wanting to brag about having good ideas. And so what you do with the stocks matters a lot too. And that's what these streams are for. Like that's why I do these streams for you guys because the hope is that like as I not even just share my process, but show you guys where I made mistakes um, throughout my career, you'll be like, okay, I'm gonna now avoid that mistake. Because in markets, you either make the mistake or you learn it through a lesson. You either learn that through losing your own money or someone else who lost their money telling you not to do that. And it's your choice of whether you want to listen, but mostly all the things that I rant about, like today on Spaces, are a function of mistakes that I made that I don't want to see other people make. And I think in hindsight, it feels like obvious mistakes, but they aren't always. Hold on, let me get this connected and then we'll start. That behind me is an Odyssey. It's kind of an older Odyssey, but back in the day they used to be expensive. I don't think they're as expensive anymore. Yeah, most Discords are like that. People just share a shitload of ideas and then celebrate the good ones. That's I mean, I live in Dallas, so I'm a Cowboys fan by default. Most Cowboys fans don't even live in Dallas, so at least I'll take that as a thing. I don't know why this screen share thing's not working. Oh, there we go. Okay, hold on. Did I post it in my journal? No, I didn't. Okay, let me post it in there and then we'll get started. Copy message link. All right. Share screen. Recording. Yeah, it's recording. Okay, share. You guys can see that screen share now, right? Okay, perfect. All right. Um, all right, so this is obviously the big winner of the day, the big winner of the week, the big winner of the month, IRDM. Um, Before I get into individual stocks, we are going to go through pretty much every position except the legacy positions. However, we are going to go over Hood today because we recently upsized that. I think it's the first time in, I mean, for those that have been in this server for years, what, first time in 2 years that I've upsized the legacy position. So we will go over Hood today as well, just because we have those calls on. Um, but we're not going to go over Tesla or Amazon. You know what? Maybe we will. We'll just go through everything because actually, those have been acting well lately too. Maybe some of you are trading those, so we'll go over all the positions. That'll be the bulk of the workshop, and then we'll do Q&A at the end. I just want to do a little bit of a market overview. I said we'd do 30 minutes on this, probably not all the way through 30 minutes for the market overview part, just because I tend to keep a pretty simple view on that. I talked about this on Spaces today as well. I have a very simple view on what is a green light market versus a yellow light market versus a red light market. Okay. When I'm in a green light market, to me, that means I am looking for longs. Okay. And I'm more than willing to hold existing longs. When I'm in a yellow light market, it means that I am hesitant to add to existing positions and hesitant to open new positions. When I'm in a red light market, that means I'm sitting on my hands and potentially reducing exposure. So those are the conditions. Now, what makes each of those lights, if you will? There's only two factors for me. That is the 50-day moving average and the 200-day moving average on the S&P 500. When we are above both, we are in my view, a green light market. When we are below both, we're in a red light market. When we're in between the 50 and 200 day, you're in a yellow light market. That is as far as I think about it when it comes to market conditions. There's a lot of people out there that do a lot of fancy stuff. They'll look at, CTA positioning, hedge fund long, short, retail inflows, hedge fund inflows and outflows, to try to decide whether they should be long or not. I have never found any of that information to have a reliable correlation with the direction of the S&P 500. So instead, what I do is I just say, are we in favorable conditions? Are we in cautious conditions? Or are we in unfavorable conditions? If next week we're trading below, for example, this 50-day moving average, I'm going to become incrementally cautious. If the week after that we're trading below the 200, I'm going to reduce some exposure and become even more cautious. It's that simple for me. Now, some of you have different strategies or different conditions by which you assess market strength. I keep it that simple. Beyond that, it is all a stock picking game for me. And so that's where the majority of my focus goes. I'm a micro guy over a macro guy. I don't think the macro doesn't matter. I just think you shouldn't spend a lot of time crystal balling and predicting the macro. There's a difference. It's different to say macro doesn't matter versus are you wasting your time extrapolating it? And I believe the latter. I think that yes, it matters. Yes, it drives markets. Yes, it can produce crashes and corrections, but it's not your job to attempt to figure out when, because if that was a doable thing, PhD economists would be billionaires, and they're not, right? Does anybody know a PhD economist professor that's a billionaire? I don't know any. So you're not a PhD economist and they can't figure it out, so you can't. And once you kind of come to terms with that, you try to rely on more simple expressions of what is a favorable market and what is an unfavorable market. And markets can go from unfavorable to favorable pretty quickly. I actually saw a funny report from Larry on Twitter, who's a great technical analyst. He's on our spaces sometimes, about this recovery, this gap up here. He wrote, "We're in a Saquon Barkley market," which I thought was funny for those of you that are NFL fans and have seen his backward uh, jump over a defender. That's kind of what this was. This gap up right here, where we went from below the 200-day moving average and below the 50-day in this candle to in one day above both of them. It is very rare to see that. So that's the type of explosive recovery we're in right now. And as you can see, it's been up, up, and away. We've just been running away with the football ever since we made that leap. So it's a hard market to find entries right now if you're not already long. I feel bad for the people that have like a lot of cash because it's difficult in this environment to find opportunities that are favorable to buy stuff. There's like stuff that I want to buy that's just been gapping up day after day after day. It sucks, but I have to be disciplined, right? Like I haven't made a consistent career. I mean, all things being equal, this will be another triple digit year for me. I mean, I closed today close to 90% on the year. That'll be back to back to back triple digit return years for me. 24, I did 260%. Well, actually, 4 years in a row because 23, I did 170. 24, I did 260. Last year, I did 505. This year, I'm almost back at 100. So you don't put up back to back to back to back to back triple digit years without discipline. That is like the guiding principle. So I have some rules. I don't always follow them, but I have some rules and I try to follow them. And one of those is buying smartly. So, there are some runaway stocks that I want to buy. I'm just waiting for them to settle out, pull back into their moving averages. Maybe one of them had a bad earnings report. Maybe something else changes. But we're not completely done with the Middle East situation. There hasn't been a peace agreement. Oil's still trading in the 90s. So there are still risks in the market. I don't want you to think this is a riskless market just because we've been gapping up and away. Don't misconceive that. Just because market conditions are favorable, in three candles to the downside, market conditions could become unfavorable very quickly as well. Okay. So that's something I just want you to keep in mind. Yes, this was a fantastic recovery. Yes, stocks are setting up, charts are setting up, themes are setting up all over the place. Everything from quantum to telecom stocks to satellite space and satellite stocks. These names are just taking off up and away, right? So there's a lot of opportunity. You can't just ignore that. I'm not ignoring it. I'm looking for those opportunities. That's why I've been throwing out these flyers, these starters all over the place, CTS, BDC, and then this week we got Lumen. We'll go all over all those charts today as well, by the way. But yeah, I mean, I'll continue to do that. I'll continue to trickle in exposure. I'm on margin now for the first time this year, I think. Maybe I was in January. I think outside of January, I haven't been on margin for February and March. I'll have to go back and look through all the portfolio updates, but I think that's about right. So now I'm back on margin for the first time. Not much, but I think 3.5% margin, something like that. I'll have to do the math on tomorrow's portfolio update. But we've been pretty much 100% long for most of the year. I think the highest I went in cash was 5% near the bottom of the correction. So we're basically fully exposed for this recovery. So we're loving it. Portfolios at new all-time highs. Nothing to complain about, right? So market conditions are fine. Could they change? Yes. Are there still risks? Yes. Oil's still floating in the 90s. I'd like to see oil come down to the low 80s really to really get that risk out of the way. I'd also like to see the straight open back up. Those are still things I want to happen, but the market's brushing them off for now. So we dance with the music, right? When the market's above the 50 and 200 day, we dance. When it's below, we stop dancing. Pretty simple, pretty straightforward. Other than that, we're just going to worry about individual stocks. So in the Q&A session, if we have more questions about the broader market, hit me up. We'll look over those broader questions, but we're going to get into the individual stocks now, and then we will chat about the overall market later if there are questions on that. So let's go through it. Maybe we'll start with the best performer of today, and then maybe we'll go to the worst performer of today, and then we will go through the rest. So let's start with the best performer of today, obviously up 14%. I made a really interesting note last night. It wasn't a buy recommendation or anything, but I made an interesting note last night telling you guys why I wasn't selling IRDM yesterday. And then we happened to get a 14% move to the upside today. Call it luck or just call it conviction. I would call it the latter, but this has been a name that we really liked for a while, right? So back in December around here, this is where I started talking to you guys about IRDM, 19 bucks. And then I got shaken out here, right? So this attempt to break over the 100-day, which is what I was looking forward to, got rejected. And then we saw this cascade down, right? So I got shaken out there. And some of you who were in here back in December remember that. And I was pretty annoyed about it because I was like, man, I kept saying that I thought this was the cheapest space and satellite stock, the most reasonably valued. And it annoyed me that it flushed. And then what happened? Then we got some nice catalysts here, started moving to the upside, right? And started kind of attempting to reclaim these moving averages. We got pushed below here, came back up, pushed back below, and then this was the third reclaim in a matter of weeks, right? And so once I saw this and I saw the 100-day tightening, see how the 100-day here is much closer to the upsloping 9 and 21 right here? This is sort of that pinch action that we talk about a lot. And for those that have watched my swing trade like a pro workshops, you know this setup where we have a 9 and 21 EMA curling up, and then you have an overhead 100 or 200 or 50 day. You guys know I like to hit those types of setups. Some of our biggest winners from last April, Nebius, Centris, Kratos, so many of them were these exact types of setups. Um, Even last year when we traded Bloom, by the way, energy, I put out that idea when it was in the 20s. I didn't hold it to where it is today, but even then, Bloom was having one of these setups too, where it was pushing into the 200 day. So many explosive stocks do this, where their short-term moving averages push them up into their 200 day, and then you sort of force a breakout through resistance. Um, that's been a setup that I love to hit, and so many of our best names have done that. So when I saw it doing it again here, I got interested, kept watching, saw I make this move, saw I was still acting like shit, stayed away, and then once it graduated here in this range, then I started getting really interested again, right? And I started watching it much more closely. And then when we finally, in late Feb, got this break over the 200 day, right here, this cluster of price action, I said, okay, fuck it. Now it's taken the 100, it's taken the 200 day, it's de-risked the trade. You see how there's a clear flip from support to resistance. Very clear. Right? This was your highs here where the price was getting rejected. This candle changed things. And then price, this was what I call a graduation in price. See how the lows of this range are the highs of this range, right? So you got a graduation in price here, flip support to resistance, and that support flip to from support to resistance happened to be this 200-day moving average. When I saw that, I was like, okay, we're getting back in. So what did we do here? End of February, when my alert went out on IRDM, we got the 22.5 calls with the stock trading at about 22. Okay? Not far out of the money. I didn't need to go 50. Some people think, oh, Stock Talk, I want to make a 150% gain, so I have to go 50% out of the money. No. Our contracts today, these contracts we bought right here at the 22 and a half calls, 50 cents out of the money, are up 600%. 600%. Did that require me to go gamble and go super far out of the money? No. I was able to tackle a liquid contract very close to the money with very reasonable IV at the right time. And then what proceeded to happen? We caught on to this 9 EMA and just ripped to the upside, right? Like an absolutely parabolic move. I mean, the price wouldn't stop. We went from 22 to 26 within a matter of a week and a half and then just took off. Catalyst after catalyst after catalyst. You have your GSAT sympathy candle here for the first one. You have this one as your BVLOS and drone catalyst with their PNT ASICs that they're making. That was this catalyst. GSAT sympathy catalyst kept climbing. Then the Oppenheimer note, I think it was from yesterday or today on IRDM saying that it was still undervalued. Then you get this 14% gap up, and then we're gone, right? And now the contracts are up 600%, and now we can do whatever the hell we want to do. You could sell 1/7 of the contracts now and cover your entire cost of the whole trade. And then you have free 22 and a half calls going into July. You can dance, exercise half of them, sell half of them, do whatever the hell you want to do. It buys you flexibility, right? And a lot of people went, well, stock like you sized it so small back here, right? I mean, I sized it at 1.5%, but in entirely options, right? There was no common equity attached to this trade. When you put 1.5% of your portfolio in entirely options and it goes up 600%, you do the math. That moves your portfolio, right? This went from a 1.5 to one of my biggest positions in the whole portfolio in a month, right? This is now going to be the fifth biggest. I don't know. I'll have to do the math tomorrow. I think it's the fifth biggest position now. Went from a nothing burger to a fifth biggest position in a month, snap of a finger, because we leveraged properly. We attacked the chart at the right time on a flip of the 200-day from support to resistance, and we got a parabolic move. The thesis was right. BVLOS, that's beyond visual line of sight for drones. PNT, that's been a super hot theme. Everything from theme to laser to so on and so forth. Every type of position, navigation, timing play has gone crazy. And then you have the PNT A6 that accelerated that. And then you get the GSAT buyout that accelerates that. So this thing has just had parabolic levels of catalyst lately. Now, is it getting a bit extended? That's the question we have to ask ourselves, right? Well, yes, it's gone on a parabolic move. It's gone, $43 a share now. It's $8 removed from its closest moving average. What do we want to see happen here? As people who, well, not people, I want to hold this through July, right? So what would I want to see happen here? Well, it's pretty simple. We want to see price action settle down, right? Consolidate. We want to let these moving averages catch up to price. Now, how does that happen? One of two ways. Either the stock pulls back into the moving averages or the stock slows down to allowing the moving averages to catch up. That's the only two ways for the moving averages to catch up. So we need one of those two things, either a nice pullback into those short-term moving averages or consolidation here. Now, could it keep ripping? Yes. Because of the nature of the catalyst on the table, it could absolutely keep ripping. They are the really one of the only peers left that's reasonably priced that has similar assets to GSAT, right? GSAT is selling at 40 to 45 times sales. IRDM is still trading at 5 times sales. So is there more upside? Yes. Could it come right away? Potentially. We would want to see it as shareholders who want to swing this thing. We want to see that upside happen in a healthy way. We don't want this type of price action in perpetuity. I know the gamblers out there, you guys want to see it just green, 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 green. I mean, who doesn't like that? But trust me, you want to see healthy price action. So we'd like to see this thing consolidate a little bit. If you're not in this, like, look, could it keep going up? Sure. Am I still long? Am I still holding? Yes. I mean, our break even on those 22 and a half calls is 25 bucks. The stock's, almost 45 bucks now. So yeah, of course I'm going to hold. But, as a new entrant, yeah, your risk is higher here. It's going to be tough to find a spot. You're going to have to let the stock settle out a little bit if you're somebody that wants to get into this name that didn't get into this name when I talked about it um, in February. So fantastic move on IRDM. It has been a portfolio driver this year. I think my total dollar return is highest on VIAV and second highest on IRDM now for the year. So pretty good. This has been a portfolio moving stock for us for sure, and has been absolutely parabolic. So, and I think back here in December, this is even before Mystic was talking about it. Back when I was talking about it at 19, and then I started talking to Mystic about it over here. He got interested in it around that 19-20 range as well. So this is another one of those Mystic Stock Talk Weekly collabs that has doubled. A lot of you hated on us for Cody last year. I don't own it anymore, but that doubled this year too. So don't fade a Stock Talk and Mystic collab. That's the lesson. But Mystic's my most trusted friend. I mean, Mystic and Yonezu are in terms of the markets. I talk to him about ideas so much. We think very similarly about stocks. Mystic sort of likes the smaller market caps. I like a little bit bigger market caps, a little bit more liquidity, but he's a brilliant guy. And when we agree on stuff, we're usually right. And over the years, I think most of our collab ideas have done very well. They might not always work right away, but they tend to do very well. So IRDM, beautiful stuff. Great to see. Let's move on to MITK. So that was the best performer of today, plus 14%. MITK, I think, closed down about 7%. As you can see here, I don't know, a lot of people were panicking, saying it was high volume or whatever. I think one of the sells was high volume, but you can see here, not really overtly concerning sell volume there. Let's zoom in a little bit here. You can see here today's candle, what happened here. So at the lows, we touched the 50-day, right? Just kissed it. Then we recovered off the lows and closed back above the 21. Okay. So I look at this and I go, look, maybe today was somebody getting out before some catalyst. I don't know. But it's not my job to figure that out. It's my job to monitor technical structure, and I don't see anything wrong with this technical structure. You have a 50-day that's very close. Look what this over the course of this consolidation period, right? Since beginning of March, or what is this? Yeah, beginning of March. What has happened? Well, here at beginning of March, we got this gap up. Look at these moving averages. Look at the separation, right? And I talk about this a lot. When the moving averages are wide apart, far apart here, your risk is magnified. You want the moving averages to be tight. That's when you know you're in a good risk reward situation. So you had these moving averages gapped apart. What happened? You got a period of consolidation to allow the moving averages to tighten. Right now, all the moving averages are 50 cents apart. You have your 50-day below price supporting it here. Nice, clean. See this clean uptrend on the 50-day? And then you have these 9 and 21 just swish swashing around, allowing price to consolidate. And that's exactly what they've done. So I still love the structure here. Let's go to the weekly, right? Like, what are we doing on the weekly here? Do we have any breaks here? No. Right? Look at this weekly structure. What's wrong with this weekly structure? I do not see anything alarming. So you just gotta take a deep breath sometimes. Like everyone in the chat today was like, "What's going on with MITK?" It sounds like it's a small cap. It's gonna be volatile. You have to understand these things. If you're in, if you want to go trade 100 billion market caps, go for it. I mean, they can gap up and down 6% too. It happens all the time. It's not like you're going to be immune to that. But you want to trade small caps, like, you can't handle the heat, get out of the kitchen. Don't trade names below a 1 billion market cap if you can't handle volatility like that. Like, either grow up or put up or shut up. Like it's not even this isn't like if you think that's concerning action, you're not going to be able to trade smaller mid caps. So anyway, I think this structure is like perfectly fine. I can't look at this and say, oh my God, this is alarming. I mean, even the volume profile, like look at the volume profile here. Like what is concerning? Nothing. So I don't know. Anyway, yeah, MITK did not have a good day today, but okay. I don't know. Didn't bother me at all. So, yeah, I know a lot of you were asking about that, but I don't know. I didn't see any bad news on it today. Somebody probably just wanted to get out of the stock. Somebody with a lot of money. Like, cool, good for them. I didn't sell any today. I'm not planning on selling any. I actually, if I had been watching it more closely intraday, I would have bought more here at the 50, but I wasn't watching it. I was busy today. Um, I'm trying to get some stuff done real estate wise, but so I've been busy the last couple weeks. But either way, if I'd have been watching this more closely, I would have snagged some more calls there personally. So anyway, I didn't see any issues with this at all. I think MITK is a very unique exposure because there's not a lot of pure plays on identity fraud and AI fraud in the market. There just aren't. Clear Secure is a play, but they don't even break out their identity fraud revenue. The vast majority of their business is the TSA business. So I mean, I just don't think there's a lot of comps to MITK in the market right now, and that makes me interested in it. Because I think what they're addressing is a real need. If you go to their X page, they're talking all day long about it. AI fraud in banks, AI fraud in phone calls, AI fraud in video calls, how they're addressing it. They're meeting with like big management teams. I like that. Like that's what I'm looking forward to. I want them to pivot from their legacy check verification business into an AI fraud, an anti-AI fraud area. And a lot of people, when the software sell was happening, MITK sort of got caught in some of that software selling. It held up a lot better than a lot of software names. I'll tell you that. I mean, you think this price action is annoying. Look at some of the other software names. Um, and look, that happens sometimes. Sometimes babies get thrown out with the bathwater. I do not think that AI fraud and identity verification is susceptible to vibe coding. Why? Because that's going to be one of the few areas where you want it to be human coded. Because the entire purpose is to avert invasion of AI software into the human domain, right? The entire purpose of that software is to keep it human. So I think that there's an edge there. If I'm wrong and the price action goes against me enough, I'll get out of it. But for now, structure looks fine, and I like this name a lot. So I'm more inclined to upsize this on dips than I am to get out of it. That's just my view. If it's annoying you and you're like a little baby and you cry when stocks go up and down 6%, sell it. Don't annoy me just because you're annoyed. Yeah, some of you in the chat were like, "Stock talk, when is the stock going to go up?" I almost just feel like telling half of you guys when you ask me that, just sell the stock. Like you don't know what you own. You don't have conviction. Like if you don't have conviction, you need to come to me being like, "What's going on? I'm freaking out. The stock's down 5%." You just don't know what you're doing. You got to either go back and read the thesis and decide if you like it or not. I think that's one of the big things with this thesis library I've shared. Go read the thesis. Check your own work on it. See if you agree with what I'm saying. You don't agree with what I'm saying, don't buy it. There's plenty of stocks I have in my portfolio, right? I have 19 positions. Go buy a different one. So that's my feeling on it. If you can't handle the volatility, don't own the stock. Period. End of story. I really like this name. I'm more inclined to upsize than I am to sell it. That's as simple and straightforward as I can be with you guys. And obviously, you can go read that thesis in the Stock Talk library if you want. Let me expand this. Okay, let's hold on. Let's open this up. Give me a second here. And again, if you do have questions, put them in the questions channel, and we'll get to those in order when we get to the Q&A portion after we go over all these charts. But it shouldn't take more than 30, 45 minutes to get through all the names, I don't think. Um, I'll try not to be too long-winded on every stock. Hold on. All right, let's look at our newest position, Lumen. Okay, so some of you asked why did I enter yesterday? So, all right, so I was monitoring this name right here when it was in this consolidation down here. Okay, and I was watching it bounce around this 200-day, but I couldn't get decisive on if it was breaking down or defending it, right? I couldn't get decisive on this was going to resolve to the upside or downside. So when I saw this starting to move here and recover, and I saw these 921 sort of bounce off of the 200-day support, as you can see here, I started thinking to myself, okay, this thing might just rip and go. And it sort of did. It got these big candles, got a little red here, got a big candle here. When I saw it take all of the moving averages, so this was the flash point for me. I saw it pop over here. Then on this day, I was like, oh, it might go. And I started buying some contracts. And then from where I bought it near the highs, it faded and sort of bagged me. Or sorry, other way around. When I started buying it, it started gapping up. And I was like, okay, I don't want to pay up on an up day. So I was going to wait for a red day. What I didn't realize until after the session, and this was my mistake, was that we got at the lows a perfect retest of the 100-day breakout and confirmed it. If I had seen that, I would have just bought here, but I didn't. What ended up happening the next day? The next morning, you get the Amazon catalyst, so you gap up, right? And then when I saw that catalyst in the morning, I was like, okay, well, I wanted to get an ideal entry, but I wanted to buy this name. I'm just going to buy it here. So I bought it that morning, and then some of you followed me into it, and then we ended up having a big candle on that. Uh, I like this name. I like the story. It's not a name I'm going to invest in for years and years and years or anything, but I think right now with the environment around the Chinese telecom crackdown, the greater focus on AI infrastructure around fiber, I think some of these fiber players who have spent years and billions of dollars in debt building out these fiber networks, I think they're being leaned on now by companies like Amazon, by Oracle, by Anthropic, because high speed, low latency connections are becoming more important because of these localized cloud centers, these regional cloud centers. They want this sort of interconnection to be at very fast speeds, very low latency. And so fiber is becoming relevant again. And a lot of these fiber stocks that I've mentioned some on the sell side, I've mentioned some in my journal, are re-rating dramatically. So this one's interesting. I'm staying long this one. Hasn't even started to really move from where I wanted to. Um, I like this on all time frames. If you can see here on the daily, very clearly defined support here around the 200-day, right? And then you see the 9, 21 curling to the upside. See how even the moving averages found support at the 200? Do you see that? How these moving averages came down, bounced into the 200, and then wouldn't let it pull the moving averages below. That is very, very textbook technical structure. The moving averages themselves are cupping off of support at the 200-day. And what are they doing now? This 9 EMA is ripping not only through the 50, but also through the 100, right? So we want to see follow through here on these moving averages. We want these moving averages to catch up quickly to price. We want to see them surge to the upside through all of these longer term moving averages. That'll be a nice look. And we can see on the weekly too, right? Similar sort of structure, right? Nice support down here at the 50 week. Very, very clearly defined support going all the way back really to this candle. Very clear surfing here, the 50-day, and now here a pop over as the 921 week begin to curl back up. Monthly, very, very clean structure here also, right? So weekly, daily, monthly, all looking clean on this name. You probably expect some resistance here at 11, where this 200-month moving average is here. That would be totally normal to expect that if this name does get running, that it would bump into here and see a little bit of a soft rejection. But a breakout past that 11 point could be quite explosive, right? Then you start accessing additional range. So as you go further and further back, you can kind of see where the consolidation was, and you can see the big volume candles here where people decided that maybe it was time for this name to start inflecting. So it was a great stock to own from the early 80s all the way through really to 2014. The spending cycle sent it all the way down here, and now it's sort of recovering on this new use case for their fiber network. And I'm not going to go over the whole thesis. I wrote the thesis out yesterday. You guys can go read the Lumen thesis if you want. It's in the thesis library now as well, but it's also in my journal. So you can go check that out if you want to. I'm not going to waste 20 minutes here going over that thesis, but as always in the Q&A section, if you have questions about it, feel free. There are other telecom names I want to own, but they've been ripping in my face. So yeah, I have to wait. I have to wait for those to settle out. So anyway, uh, I will let you guys know if I am able to get a position on those other names that I like. There's really two others that I like. Um, if I'm able to get a position, I'll let you guys know what they are, and I will share the thesis as well. All right, so that's Lumen, covered Lumen, MITK, IRDM. Let's look at Viavi, which has been our best performer year to date. I mean, what a monster this thing has been. Open the year in the 18, 19 range. Many of you were crying wolf to me saying, Stock Talk, why is Viavi your second biggest position? It's not doing anything. Stock Talk, I got bored. It's chopping around. It fell below the 21 EMA. I can't even, it makes me laugh going back to January and December and looking at some of y'all's comments about Viavi because look at it now. And it reminds me of a lot of your guys' commentary in the early stages of my picks when they trade sort of annoying. Anyone remember Amcor in the first 3 months? How many people would tag me when it was 28 saying like, when is this going to move? The stock's too boring. The margins are too low. Right? It doubled, more than doubled. Same thing with P Lab, same thing with everything, everything. Everything I buy, the first couple months, choppy, goes up, goes down, -6%, -7%. What's going on? What is the thesis still true? This, that, yada, yada. I mean, when I brought up IRDM, people said the same thing. They were like, oh, well, IRDM, it's not an interesting business. It's not an attractive business. It's boring. Like, no wonder the multiple is low. I just don't listen to people like that. Like, I have a, you guys think I don't just buy stocks out of nowhere. I'm not just like, oh, no, nice chart, let's buy it. That's like 90% of Twitter. And that's not what I do. I find I do a lot of work. Like I spend maybe 5% of my time trading, 95% of my time researching. Like I am selective. That's why 95% of the stocks I pick go up. Um, there's stocks sometimes that take a while for the thesis to pan out, but that's okay. I generally exercise quite a bit of patience. So yeah, Viavi, not much to say other than what a year it's been for this name, and I am still holding, and it is still my biggest position. And again, I always get the question, why? Well, why is your biggest? Well, why are you still holding? It's doubled, it's tripled. I mean, this is more than tripled from when we bought it, right? But this is the all-time chart. Where are we? Here. So that's why I'm still holding. And if you take a perspective on price, we have eaten through this entire. This is a 20-year base, okay, that had highs of $27. $27 was a long time ago. Like, we didn't just break out through the highs of the 20-year base. We ripped through the highs of the 20 years base, right? Like, let's zoom in. Like, look at this. One, two, three, four, five, six, seven, eight, 7 out of 8 months green to go up about, whatever, 200, 300% on the stock, 300% on the stock. So, yeah, still my largest position. I don't have plans to sell it because I am playing this one for the long haul. Don't ask me what's happening to Viavi if it comes back down to the 30s. Don't ask me, are you selling if it breaks down below the 21 EMA? I am not selling the stock. No. Cost basis is too good. You know, in March, I exercised more Viavi back here. Middle of March, I forgot it was, end of March, I exercised more Viavi. People were like, why are you getting more? I mean, look what it's done since then. Same thing with Amcor. You know, back in March, look what Amcor was doing. People were like, look at this shitty chart. Why are you upsizing it? Look what Amcor has done in April, right? I told y'all I was doing that. When those exercise dates came up, you can go to my journal. What did I say? I said, I'm exercising Viavi and Amcor calls. They were already huge positions. Then Amcor proceeded to go from 40 to 60 in a week and a half. right after I exercised. So what does that do? Adds to performance, right? And that's conviction. Like why would I exercise calls in a position that's already, more than doubled for me and, the chart looked like shit when I did it. The only answer to that is conviction. Why are Amcor, ENS, Viavi still my biggest positions, even though I bought them 6 months ago? Conviction. I'll sell when I think my thesis has been satisfied. And that's conditional. It depends. Some of you ask, when do you sell? What's your rules to sell? You guys are referring to the type of crap that most of Twitter preaches, this like technical setup trader crap. Like I just think it's crap. Like this idea of like, oh, you scale out at 10%, 15%, like what? Like it's so silly to me. No real like do you think Druckenmiller does that or like Lynch or any of these guys do that? No, they have a thesis. And they wait till the thesis is fulfilled and then they sell. They don't sell when it popped 10%, sell into the gap up, like trim some into the gap up, like roll out these contracts. Like it's just silly behavior. I'm not interested in little profits. I want big multi-bagger gains on the stocks, or I don't want them at all. They don't work. They don't work. I'm out. I'm not going to sit around for months and years waiting for something to work. I'll be a little bit more patient with some stuff than others. Like Synaptics, I've been very patient. We'll go over that chart. That chart's shaping up again. Um, but most of my positions, I have good entries. They work quickly. Not all of them will, but you look at what I'm doing if you want to know where my opinion is on those names. Like if I'm not selling into weakness, there's a reason for that. That means that there's something else about the stock that's making me want to hold it through that period. And so it's a layer cake. Trading and investing is a layer cake. It's not like, you know, hard and fast rules. At least for experienced traders, it's not like I teach you guys a lot of rules about options, like less than 75% IV, less than 15% out of the money, 90 plus days out. These are rules of thumb. I don't follow them strictly because I don't need to because I'm not a noob. But for those of you that are noobs and you're not used to how the markets function and you're like a crybaby every time stuff goes down, you need to have rules. Because if you don't, then you're just going to be lost and stressed all the time. So yeah, I have rules of thumb. They are not hard and fast rules. They're not written in stone. I will break rules if my conviction overrides um, some sort of factor. So yeah, Amcor has been wonderful for us. I haven't needed any other semiconductor exposure because this thing has just performed so damn well since we bought it. We bought it here, ladies and gentlemen. This is where I found Amcor attractive. And I can't, I mean, you guys want to go back to September, October of last year? I was just pounding the table like a wild animal on this stock at 24, 25, 26, 27. Basically, every dollar through the 20s, I was screaming at everyone I knew to buy it. I was screaming, me and Amit were in, can't remember where we were at that time. I think that was the first time I met him. And I was like screaming at him to buy, literally, like in person. I was like, buy Amcor. And it was like $26. He didn't listen to me. He didn't buy it until it was like 35 when I went on his stream. But you know, I'm not blaming Ahmed. I love the guy, but I was screaming at everyone I knew back then to buy it. I was on Stocks on Spaces every day. For those that listen to Stocks on Spaces, when I was on every day, buy Amcor, buy Amcor, buy Amcor, explaining the thesis. And then people ask me once it's 50, oh, hey, is Amcor still good to you? Should I buy it now? Right. So it's always the silly stuff like that. But anyway, Amcor, another beautiful name for us that's done wonderfully and has done a lot of heavy lifting for the portfolio since September of last year. All right, Inersis. All right, big bad boy Inersis. One of the only domestic battery plays in the country and just has been wonderful for us. I know this earnings pullback scared a lot of people, but look how perfectly it found support here at the 100-day and then just rip roared back to new highs. And now we're sitting up here consolidating a little bit. Totally, totally fine to consolidate a little bit at new all-time highs. But what a beauty this has been for us. And, up and away, right? We caught it at the right time, right? We bought it here at 115. Right in this perfect structure. I saw this formation cupping. Let me zoom in. When I saw this formation cupping, right? We had been in this range. Look how long we were in this range. right? Going all the way back to 23, we were stuck in this range. When I saw this cup building here, we came up here, I was like, okay, it's time to get in. So we did, right? And you guys have, seen yourselves. This is where we got in back here, October, right? And look at this run that we had. I mean, what a run from October all the way to February of this year to 200 bucks. So beautiful. And I had so much leverage on this position. Like it really only ran like 80% from there, but I had so much leverage on this position that it just sent the portfolio parabolic. I don't have any calls on it anymore. The funny thing is late last year, Amcor, ENS, Viav were all heavily options weighted. I emphasized that on every stream, told everyone that, made it very clear. Now none of them have options. Now they're all equity holds because they have deep cost basis advantages. Write them up 100% or close to 100% on ENS, well over 100% on Amcor, over 200% on Viavi, right? Those are such deep cost advantages. I'm just going to hold them now. They're chilling. Big ass weightings in the portfolio, yeah, but no leverage. They don't scare me out of it when the markets are weak. And those could become major compounders for me over time, right? And so newer positions, I like to add a bunch of leverage, as you guys have seen lately, right, with these calls. And then once it's paid off and I've taken the risk and I've been paid for taking the risk, I sort of mute down the beta of that position so that I can hold it without being too stressed out all the time. Unlike some people who just constantly preach roll out, roll out, roll out. It's like crackhead behavior. Like, oh, your 120 is winning the money, roll out to 150. Oh, your 150 is winning the money, roll out to 175, roll out to 200. Like, sure, it works in a raging bull market. The second volatility gets involved, you're going to get a headache. So I don't roll out. I sit on in the money contracts. Sue me. People think it's crazy on Twitter. Oh, how could you do that? Sue me. It works. Works really well. Because I can control huge amounts of shares with very little capital input. It's how I'm able to be in 20 different positions at a time and feel them all. Because, like I mentioned earlier with IRDM, 1.5% position that went to almost a 9% weighting in a matter of a month. It went from being a nothing burger into the portfolio to being almost, 1/10 of the portfolio in a month. So that's why I approach it that way. And maybe in July, depending on where IRDM is, I'll exercise a portion of those calls and then boom. Now we're an IRDM shareholder at 25 a share instead of 50 or 60 or whatever it is in July. So yeah, that's the way I approach things. Close to the money calls that end up going deep in the money and then give you flexibility headed into the expiration date to sell half, sell 70%, do whatever you want. Just makes life easy. So that's the way we approach these high conviction positions. All right, so that's the big three we covered. We covered IRDM. We covered MITK. We covered Lumen. Let's look at OSS. Another one, man. I swear, every time chat, our chat gets to peak pessimism on a stock, it rips. I swear. Um, so anyway, you guys were crying like babies about OSS here, and then now we're back to basically $10 in like 5 days. Um, and this is another one where I'm not selling it. I mean, we're sitting at a 200 million market cap. The company's running a close to a 50% gross margin, growing at a 25 to 30% clip with a very, very secure balance sheet. Basically no debt. A very, very hot niche. Uh, One or two defense contracts, stock doubles from here. So I'm not interested in selling it at all. I've said that many, many times on here, yet every time it goes down, people are like, well, where's your max risk? I'm not selling the stock. It's another one of those where I'm just not selling it. Amcor, ENS, VAV, this stock, not selling them. So you can sell them. I'm not telling you guys, you don't have to do exactly what I do. Some of you are in my stock sometimes and you have life-changing gains that could literally change your life. Take them. If you need the money, take it. If you're looking at your screen and you see an amount of money that's like a game show where who wants to be a millionaire and it'll change your life or your kid's life or your family's life, take the money. Don't wait. Don't be like stock talks not selling. So I'm not going to take this $1 million off the table, but take it. Um, I just tell you what, guys, what I'm doing. Like that's what makes my service different from other services is like there's a lot of great, smart people on X that just give you ideas and then say, do whatever you want with it. I just tell you exactly what I'm doing. If I'm still holding it, you'll know. If I sell it, you'll know. So I just can't lie to you guys. I am still holding the stock and I don't plan to sell it. And I'm not going to sell it here. I'm not going to sell it if we get back to these $13 highs either. So do what you will with that information. You can sell whenever you want, but I'm not selling. Um, we talked about this with the monthly chart. Like, does that look like a stock you want to sell? Not to me. That's like a gorgeous monthly setup, in my opinion. I mean, like, look at the volume profile. Like, who are we kidding? Forget about the volume profile. Look at the structure, right? Here you have your nice high point, building support above the high point here for the last 4 months, above the highs of the previous range from 21. Um, I don't know. Think it looks gorgeous. So this remains one of, if not my favorite small cap in the market. Obviously, this and MITK are the only two real true small caps we have right now. But gorgeous chart, high quality small cap. You know how rare it is to find a small cap in a hot theme that has like no debt, that's growing fast, that has high margins, that has a quality management team, that has, secured defense contracts, multi-year defense contracts. That is really hard at this size of a company. So I think, dude, I've spoken to their management team twice now at CES and NVIDIA GTC. I thought they were stellar. Like their director of sales, I've talked to him, I mean, over the course of those two conferences, 3 or 4 times. I mean, I talked to him multiple times at CES. The dude's fucking smart. Like I know a smart person when I see one. I mean, I'm not saying I'm a genius or anything, but I feel like I have a pretty good eye for people who are smart. That guy's smart. And he's their director of sales. And um yeah, I just like talked to him and it was like confirmation bias for everything I already thought about them. So yeah, this is a no sell for me. I don't care about the volatility. I own this at 471. You guys see, right? Constantly when I go over these examples, like where do we buy this? Like we bought it down here when it was like in the fours. Like I am just not under pressure with this name. Even if it falls to sevens, I'm just not under pressure. So it just goes back to this thing I reiterate with you guys so much about why cost basis matters so much. It's a psychological enforcer. It allows you to sit through volatility and just shrug your shoulders and be chill with it. So yeah, this is just I love really like the stock, and I think they continue to execute. And yeah, maybe the growth guidance for this year came in a little bit below what some people were expecting. Some people were expecting 40, 50%. Maybe they end up posting that anyway. Maybe they're sandbagging. I don't know. All I know is the chart looks great. The company is solid. It is in a niche that I think is a real true niche. I think ruggedized compute just will not be penetrated by Oracle and HP and Dell. I just do not think they're going to approach it. I don't think the market's big enough, but it is big enough for a $200 million company. There's 3, 4, 5 billion dollars of immediate opportunity to capture here. And as when I'm looking around, I only see very few players that are specializing in ruggedized compute systems. Um, and it's more than just the military. It's more than just putting these things in planes and tanks. It's also the idea of putting these things in robots, industrial robots for mining and construction, right? You need ruggedized compute. What are you going to put a regular compute stack into a huge automated mining machine that's like 50,000 pounds? No, you're going to put a ruggedized compute stack in there that can handle the wear and tear that's involved in operations like that. So military, construction, industrial use. When AI becomes pervasive enough that you need intelligence everywhere, and you need fail-safe intelligence in hostile environments. There's only one way to do that, and that's ruggedized computing. There's very few specialists in it. These guys happen to be one, and they're a $200 million company. So me no sell for those that don't want a TLDR. All right, we already went over IRDM, Huntington Ingalls. All right, so this one's been a little bit uninteresting lately in terms of the price action, just because the war has been sort of in this ceasefire phase. So this thing's been chopping around, but we own this thing 150 bucks lower. We I think did a fantastic job seeing this trade developing. in very early 25 in this low $200 range, and look what it's done. It's gone parabolic. Obviously, this name is indisposable to U.S. shipbuilding. I think it's the best play, the single best play on U.S. shipbuilding, in my opinion, on the market. I continue to believe that. Moving averages have tightened up, which is nice to see. Stock is still trading at a reasonable valuation. Backlog is growing enormously. They're starting to get into subsea autonomy, which is a huge category. There's a lot of bullshit plays out on the market on subsea autonomy. Huntington Ingalls is as legit as it gets as a defense technology company. There's a reason why General Dynamics, which is a much bigger company, needs these guys on every single contract they sign. There's a reason for that. It's called technological expertise, and Huntington Ingalls has it. And now they're getting into subsea autonomy, right? Under the water. That's going to be a big category for them, I think. And they're not scared to innovate. They're not like these old tech giants, sorry, defense tech giants that are scared to innovate. These guys are ready to innovate, and I think have a damn good team and talented team. So this is stock I'm happy to own for years, to be honest, like years. So no plans on selling Huntington either. It's become such a large position for us now, biggest defense position for us. Well, no, because IRDM has passed it this week. So second biggest defense position, I guess, now. But only about a percent and a half below IRDM and weighting. So yeah, Huntington, fantastic. Nebius, wow. This is another one. Man, so many stocks were going over today where it was crybabies abound in the server right before they ripped, right? And you remember the server attitude about Nebius in this range? From November to February. Oh my God, the stock sucks. It fell from 140 to 70. It got cut in half. Whatever will I do? New highs. New highs by a wide margin, trading in the 160s, right? And where did we buy it? Well, well, well. We bought it right here last April and May. I think it was last May 6th, right? Something like that. I don't remember the exact date, but we bought it down here, right? My cost basis on Nebius is 23.92. I'm staring at it right now in the portfolio. 23.92. I'm up 586% on shares. Not options, on shares, I'm up 586%. And guess what? I'm not selling. They've done nothing but execute. Nothing but execute. They've stacked $40 billion in agreements from hyperscalers. Signed, hard paper. Not like the Bitcoin miner agreements where they're all conditional and have warrant exercise rights and all this bullshit. No, just cash money for the ability to be an expert neocloud. And where does that come from? It comes from the talent this team has. Yandex, which is what Nebius was before the delisting, right? This happened. Back here, this was Yandex. Got delisted during, this for people that don't know the story, got delisted during the Russia-Ukraine war. Then their founder repatriated away from Russia, and then the NASDAQ allowed them to relist here. And no one really cared about it because they'd lost a lot of assets. But they were the original AI company back here. Remember, Yandex was an AI company before ChatGPT moment even happened. ChatGPT moment happened really at the beginning of 23. Yeah, it technically happened in 22, but really the big sort of awareness moment happened in early 23. They were delisted at that time. So they missed the first full year and a half of AI craze. Then they came onto the market, and what a story. Executed beyond belief because of the talent that they had. They knew what AI was. They had AV Ride and all the self-driving unit. They had their data management, data observability businesses. These go all to the pre-AI era. That's why Nebius is doing so well, because they have the talent. And I said this from day one. For those that remember my commentary when it was 23, 25, people were asking me, why do you own Nebius instead of this data center stock or this data center stock? What was my answer? My answer was they have the talent. You can go through the server. That was always my answer. Every time somebody asked me about that, and I was right. They do indeed have the talent. And now they have 40 plus billion in hyperscaler commitments. ClickHouse evaluation. I mean, at this point, their last round, I think, was at 16 billion or something. That thing's got to be worth 25, 30 billion now. They own 30% of that. Toloka, I don't know what it's worth, but billions. They own all of that. AV Ride, they own all of that. That's worth billions. Just their subsidiary value alone is to the tune of 15 to 20 billion. Then you add the 40 billion in hyperscaler commitments. This isn't a stock you value on earnings. It's not. Sometimes, for those of you that have watched my What Makes a Stock Cheap workshop, if you haven't, you should go watch it. this is one of those cases where you have to do a sum of the parts valuation. You have to look at the company in terms of its backlog and book value, and then you have to look on the other side at its subsidiary value and ask yourself what's a reasonable valuation. You can't look at the earnings because they're not there yet. They haven't built out these neocloud centers yet, right? So the main business isn't humming yet. You can't look at the quarter to quarter earnings and say, is it cheap or expensive? You have to look at the totality of the business, understand the business, and then value it from there. So um, we're so deep in the money here on cost basis that I don't know if I'll ever sell this thing. I don't know if it'll ever go back to $23 a share. I don't think it will. And so I'll let it compound. I'll let it continue to compound as it has done for months and months for us now. So anyway, Nebius, what a beauty. Just another proof, like so many of the names we've gone over today, of don't let the panic hands scare you out because this price action was just people crying about Nebius every day. And then a month later, new highs, right? I mean, 9 days in a row to the upside to go back to 160. All right. Nebius, Huntington, went over MITK, went over Lumen. Um, all right, let's look at Robinhood. Okay, so Robinhood legacy position, right? Robinhood was exercised on the 15 and 20 calls at the beginning of 25. So the stock back then was trading around 34, but we had 15 and 20 calls that I exercised. What did that do? Gave me Robinhood shares at an effective cost basis of 1974. I held Robinhood from there on out. So I held it through all this volatility, and then it went parabolic in mid to late 25. Great. Another name where the cost basis is just untouchable, right? I'm up 336% on Robinhood shares from when we bought it. Now, I haven't touched a legacy position in a long time. Why did I touch it here? Why did I enter those $80 calls that you guys saw me enter a few days ago? Why did I enter them right here? Well, A, I had seen this base attempting to build, right? And it's sort of, not exactly, and it doesn't have to always correspond exactly. It sort of corresponded with the highs from back here, right? This 66.91 level. And I imagine myself thinking of a line here, right? You get out the line drawing tool, but you guys can imagine it here and see where this was attempting to curl off of and defend these previous local highs. And when I saw that, I was like, okay, it's interesting to me. But more importantly than that, it was cheap. It was way cheaper than it was. When it was back up here at the highs, stock was too expensive for me to want to add to it. It wasn't just the fact that it was so far from my cost base, it was that it was too expensive for me to add to it. Here, it's still way above my cost basis. I didn't want to add shares and fuck up the cost basis, but I was like, you know what? Let's take some $80 calls. Even after today's little pullback for Robinhood, those are still up 100% for us in 2 days. And they aren't weekly calls. I bought them, you know, they're June expiries, right? So they give us time, and they're already a double for us in just a couple days. So beautiful, right? We got two gap ups, two back-to-back 10% days, calls a double. So wonderful. Yeah, I don't put out those lottos too often, but when I do, I don't do act like the Dos Equis guy, but when I do put out those lottos, they tend to work pretty well. But do not start oversizing my lottos because whenever I get on a hot streak in lottos, like with IRDM and Hood back to back, now you guys are gonna be like, oh, you can do no wrong, and you're gonna oversize the next one and it's gonna go to zero. So don't do that. Trust me, you can make money by sizing appropriately. Like IRDM, I size it at 1.5%, almost 10% of the portfolio now. Robinhood, I size that at 1%. It's now increased the total weighting of that legacy position dramatically. So you don't have to swing for the fences to hit a home run. Not in markets. Not in markets. You can hit a home run by just taking a little swing in markets. It's not, markets aren't baseball. So, take deep breaths, size appropriately. Don't get ahead of yourself on these sort of things. All right, two of our other new ones, CTS and BDC. BDC actually had, I thought, a great little potential entry today for people who are not long on this name. Came in here into the 9 EMA, sort of price settling, and we have these moving averages perfectly below. I think it could come down into 122 here and retest before it bounces, but this was a nice little formation it's building here, sort of flagging after it breaks out above this 100 and 200-day confluence. See how the 100 and 200-day are overlapped here? That should provide a tremendous amount of support. What we want to see is this 122 level be defended. Why? Not only because the 200 and 100 day are sitting here, but because that is the local highs of this previous range, right? We want to do like what I said earlier. We want a price to graduate. We want it to find new local highs, right? So, um, was a nice spot today. I know some people added some today. I actually thought about it. I was looking at some, was busy scouting some other stocks today that I wanted to own, so I did not jump on it. But tomorrow, if we see some more red, maybe into that 122 spot, I will add to this. I will add to this on a test of the 200 day. Stock's dirt cheap. This stock is dirt cheap compared to the other electrical infrastructure, cable names. This is cheap. Like they're growing, they're back to growing at a double digit pace. They've returned to growth, and the metrics are great, I think, on this business. So, uh, yeah, this is one that I'm not scared to upsize. BDC, CTS, Lumen, MITK. I'm willing, Synaptics, all five of those. BDS, CTS, BDC, CTS, Synaptics, MITK, Lumen. I'm willing to upsize all five of those. A lot of you ask me, what are you willing to upsize? Okay, listen, listen, so I don't have to get the same questions 500 times a week. Okay, CTS, BDC, covered Centrist, covered Hood. PLPC had a little bit of a pullback today, off the highs. This one, I mean, not really much to worry about. This one, it just keeps making new highs. Every time there's volatility, it just keeps making new highs. So whatever. The only concern I think with PLPC, the fact that they don't do earnings calls is a bit annoying to me. Um, but also they are a big loser if tariffs come back. They will see pressure from that because they've seen pressure from that already. So their input costs would go way up in that scenario. So that is one risk factor that we have to be careful about. But I don't mind. Again, this is another one came into all-time highs, just consolidating. It's up like 50% on the year. Like, what are we going to complain about? This one I don't provide a lot of updates on because it just acts so well. It usually does not give us moments of panic. So I don't really ever feel the need to talk about this one. It also has no options, unfortunately. So it's had a trouble growing in terms of weighting in the portfolio. It's had trouble growing because there's just no options. And remember what I said on a lot of times with new positions, I'm adding options. So they have a tailwind to grow in weighting. This one, it's been tough because even though it's gone up a lot, it's just all shares, right? So it makes it a little trickier for it to climb to the moon, but you guys know it's acted pretty darn well. Um, okay, we'll do Synaptics and ITRI next, I think, and then Kratos. ITRI and Kratos. Okay, so let's do Synaptics. So Synaptics, yeah, obviously we did not have a great entry on this one, guys. I know everyone likes to kill me for the one stock out of my 19 stocks that's not doing well, but yes, we did not have a great entry on this. And it's been shitty for a few months to hold it. I'm still holding. It's obviously fallen and waiting because of the underperformance. I didn't sell any, it just fell and waiting. I trimmed a little bit when we were in the lows of the correction, but I trimmed everything. It was an indiscriminate trim. It wasn't specific to Synaptics, but that was when I was just lowering exposure in the portfolio to raise cash, but still holding. This formation here is really nice. What it started developing here around the 200 days. So, you know, little fake out below the 200-day, quick recovery, attempting to sort of build structure here. Today's candle was real nice. Look at this. You zoom in a little bit, like peekaboo. It's like a peekaboo candle. 100-day, 50-day, right? A jump above. So interesting. I'm not gonna. I don't want. I'm not gonna get up here and be like, "Hey, it's gonna run now," because I don't want you guys to kill me twice. For those of you that got bagged on it the first time, but look, when you guys get bagged, I get bagged. Okay, so I'm there with you. But the difference is I don't sit around whining about it. Don't whine. If you size appropriately and distribute your portfolio across multiple themes, you'll be fucking fine. If you full port my names every time I put out a new pick, you will not do well. I need to reiterate that. If every time I put out a new pick, you put all of your money into the new pick, you're not going to do well. Why? Because sometimes it takes months for my picks to develop and then they double out of nowhere. So, I mean, Remember Cody last year? How many of you were just crying incessantly? It doubled this year. Okay, Amcor the first 2 months, a bunch of crying, doubled. Viavi from 14 to 18 range, people were losing their minds. It's like 40 now. I mean, I can go on and on. ENS for the first month or so was bouncing between 115 and 120, and people were like, "Oh, this stock sucks. There's no growth." Now it's $200. Like, I can go down the list. Everything. IRDM even for the first few weeks. I mean, IRDM even chopped me out. Let alone with you guys were saying it chopped me out at first. So, um, conviction is all that matters, and the ability to understand what you own, and the ability to say no, yes, it is choppy, but I'm going to hold and to sit through that. So, yeah, Synaptics looking interesting here, has staged pretty decent recovery off the lows, and now is setting up again, back above all the moving averages. What happened, guys, over this period, right? Same thing we talked about earlier, moving average compression, right? Look at the moving average structure now. What are we seeing? They're all stacked below price, right? So sometimes stocks need to have shitty periods to allow a recalibration of structure, reorganization of the moving averages, tighten them back up, shake out the people who are traders or scalpers, shake them all out, tighten up the moving averages, set up a nice, clean, even, you know, breakout spot, pop above it, recapture all the moving averages. Right, today was the first candle in since the beginning of March that we've recaptured all the moving averages. So yeah, interesting dynamic brewing here. Same thing with ITRI, right? Bunch of bullshit, annoyed us for a while. Now it's back to being like what, a buck, I don't know, what, $2 below our cost base or something. Um, so another one that didn't do great, but is now shaping back up. And now sitting here back above all the moving averages. And again, what's happened? Nice reorganization, stacking of the moving averages here. So um, yeah, these ones bit annoying for us the first few weeks, first month or so of holding them, but I'm still holding them, and my theses are obviously there for you guys to read in the thesis library whenever you want to go revisit those. All right, what do we have left? CTS, BDC, and then Kratos. Okay, so let's do. Oh no, we looked at BDC. We did not look at CTS. Okay, so CTS. Okay, so CTS leapfrog here off the 50-day from us, and then now a little bit of consolidation here. I really liked how it acted today. Like, didn't want to go down. It sounded like a nice candle today. We want these moving averages to catch up, though, right? We want these to get a little tighter with price, at least the 9. We don't need the 21 to come all the way up. At least the 9, come up to price, and then give us a little bit of a move. I really like the thesis on this one. Obviously, even though they do have some transportation exposure, stock is very reasonably priced, and there's very, very few U.S. names in the U.S. supply chain that are providing these types of services. And if you look, this is a nice sort of monthly cup forming here. I mean, really on all time frames, right? You have your cup, your handle, and now we're breaking up to the upside here. So I like this name. I like the thesis. I think it's sound. And like I said, another upsize candidate for me. I needed more size on both of these. I made a very, very rare exception and shared the ideas with you guys anyway. But that doesn't mean that I'm not going to buy more. If the stocks come back down, I will. So um, don't be surprised if I'm like, hey, buying more. And don't ape into it either when I say I'm buying more. You guys know the spots I'd be buying at. You guys know this. Those of you who watch my streams, it's not complicated. It's not rocket science. I buy when the stocks revisit their moving averages. It is not complicated. All right, Kratos, and then we will be done. I see there's a bunch of questions stacked up for me to read in the questions channel. I will get to those momentarily. Um, oh, LEU. We need to touch on LEU too. And yeah, LEU and Kratos. Okay, that's it. Okay, sorry. I was trying to just do it off the dome. I should have just gone and looked at the port. Okay, LEU. So Daily and week, well, daily is trying to recover here, but weekly has obviously been a mess. Daily, I really like the last 3 days of action here. Attempting to put in a bottom, recap the 50 today. And on the weekly, we're not quite there yet. It's pushing up, but I'd like to see more momentum here on the weekly, a little bit of breaks above. The monthly, though, I've said this from the very beginning, even if you go back to my very first workshops on this name, you guys will remember saying my focus here was on the monthly chart. And the monthly chart has done exactly what we wanted it to do. This 200-day moving average has come way down, right? I mean, if we go out, right, this 200-day moving average, or 200 months, sorry, emerged back in 2015. And look how high it was above price, this 200-month moving average when it emerged, right? I mean, a 200, for those that don't understand moving averages, which you should by now, I would hope, um, moving averages emerge once 200 months have happened. You can't have a 200-month moving average when there hasn't been 200 months of price. So it emerged back here. You can see how high it was above price. What did it spend the next decade doing? It spent the next 10 years averaging down with this base. And now it has met the price. See how this 200 came all the way down from, you know, the moon to meet the price. And so now what is there an opportunity for? Now there's an opportunity for moving average reorganization on the monthly chart, right? On this monthly chart, there's an opportunity for that now. If we see upward momentum here, you'll finally have a 9 and 21 EMA that are breaking above the 200-day moving average for the first time in over 30 years. Actually, for the first time ever. I mean, because it was never above the 200. So, I mean, yeah, but I mean, for the first time in a decade, technically, but that's when the 200-month moving average emerged. But for the lifetime of this company, and this company's been public for since 98, right? So for basically 28 years, this company's been public. This will be its first ever time above all of its moving averages now that there's a newly minted 200 month. So that's why I'm still holding it. And I still think it's a unique property. I put a note in the journal today about why the concerns around BWXT's nuclear enrichment, I think, are overinflated. They're not even going to have a facility until 2035. Centrus is doubling or tripling their capacity in 29. There's 6 years of buffer room between that moment and when BWXT would even have a facility live. So I think it's a little overblown, this whole sell centrist for BWXT thing. I know that's what the market's been doing. That's why it's been weak, but I just disagree with that take. So I put those details about centrist in the journal this morning to emphasize that. So anyway, Centrus and then Kratos. So Kratos is the most expensive stock. I think most of the stocks in my portfolio are pretty reasonably valued. I think this one's the only one that's expensive, fundamentally speaking. It trades at you can see it up here, 572 PE. It's expensive. But this is the thing with defense tech that makes it different than a lot of other categories is one contract can change everything. And that's the reason I still own Kratos is because one big contract, one multi-billion dollar contract, and it changes the whole valuation instantly. And so with mid cap defense tech, you have to be willing to a degree to wait for those catalysts. It's a different type of dynamic with these types of stocks, and so that's why I still own it. Daily chart looks like it's trying to build a bottom here. I think the weekly is still pretty weak. Yeah, the weekly needs a little bit of work, similar to Centrus in terms of the weekly chart needing some work, needing to recapture some levels. So yeah, that's that. And anyway, let's get to some questions. All right. Let me go check this out. I think this idea of like small versus large account growing, I think is kind of silly. I think you treat it the same way and build good principles from the start. Most of the like quick money things I did when I had a small account back in the day to build it were just mistakes. Like I just got lucky. And some markets will reward bad behavior and others will reward disciplined behavior. And it's hard to know the difference until you go into a bad market. So to your question, versus smaller account, how would I change it differently? I wouldn't. I would be a disciplined swing trader either way. If I could go back in time to my younger self, I would still do it that way. Can you share your opinion on the pony upgrade from Goldman Sachs Stream? I don't know enough about that company and I didn't read the upgrade, Daniel, so I can't share that. When you alert a stock option to play after the play is already gone, what do you suggest on how to capture the trade? Wait for a pullback? Pretty simple. And you're going to need to learn how to read a chart in order to know what a pullback looks like. What is your view on the industrial rollout of general purpose humanoids vis-a-vis more specific task or task specific robot applications that also use VLA model to train and inference? Does the technological difference impact how you consider investments in CTS and CINA? Not really. What I'm focused about with robots is one thing, which is I think the US and China have realized over the course of the last 2 years that supply chain reliance on China is a major issue. And a lot of my trades over the last few years, Amcor, VF, ENS, were these US based unique companies that I think would receive a benefit from nearshoring efforts. The way I'm thinking about the robotics supply chain is similar to that. I want to find companies that mainly sell into US and European markets that have direct or indirect exposure to the components that go in robots. And I'm not just thinking about humanoids. Yes, humanoids is a sexy angle. And the picks that I make in this space will have exposure to humanoids in some way, shape, or form. But you have to keep one thing in mind. There is no real scaled humanoid market at this time. So when we talk about having humanoid exposure, we're talking about theoretical exposure, right? And so it's important to keep that in mind. Like, I'm not looking for a humanoid play. I'm looking for electronic component suppliers, builders of sensors, actuators, motors that are parts makers for robots, industrial scale robots, healthcare robots, surgery robots, humanoid robots. I'm not playing a specific angle in the robotics theme. I want exposure to automated machines. So really the basket should be called automated machines, but we're calling it robots just because, it's more, not only is it sexier, but it's more of an easier to understand term. So that's what I'm playing. So no, to your answer, no, I'm not thinking that specifically about the robotics thesis. I just want mid cap companies that sell into US and European markets that build components that are useful in robots. That's the simplest way to explain it. What is the main catalyst for MITK going forward? The fact that it is a unique exposure to AI fraud and identity fraud that I don't think there's a lot of other publicly traded companies that are exposures to that. And if others go public, that'll hurt the thesis, but I haven't heard of any going public. And so right now, it's one of the only publicly traded ways to get not pure play exposure, but a business that is pivoting from a legacy check verification business into an AI fraud and verification business. Keep in mind, the main reason I bought MITK was last quarter that AI verification, AI fraud and identity verification business overtook their check legacy verification business for the first time ever. That's the inflection point for me. And that's where the focus is with MITK. Been learning more about options and doing well, especially telling you, I know you tend to take your 600 million and sell some contracts and use that money to exercise a few contracts. More and more I read, it seems the value is to sell all the contracts. Yeah, dude, like you're going to hear different opinions on that from people. I value the idea of having a period of stock ownership where I don't have to commit the capital. I'm paying the premium a lot of the time on some of these longer term swings just so I don't have to commit the capital. And that capital can be used elsewhere. It's opportunity cost. To me, sometimes the premium I'm paying for the options is opportunity cost that I'm willing to pay so that I can have higher levels of cash to deploy elsewhere. So I can be in more opportunities at once. And then when push comes to shove and when I get to the expiration date, I may take some shares. I don't always exercise shares. Like Amcor and VF were very high conviction positions, so I decided to take some shares. There's a lot of contracts that come to expiry, I just sell the whole lot. So it's not either or for me. It depends. If I want shares, great, I'll take them. If not, I'll just sell the whole lot. When do you expect Cena's AI chips to ramp and push revenue? I mean, their Astra program isn't going to be scaled for about another 6 months or begin to hit the marketplace for another 6 months. I just want to see signs of that. And I want to see more and more humanoid and other robotics companies and edge intelligence gain momentum. That's really the goal there. And I also want to see their US market share begin to pick up, ideally, because their US market share is very low. Although I'm not sure that because of the makeup of their products and the way that they sell them to distributors, that that's going to happen necessarily in the near term. But it's just a cheap stock, I think, that is doing really well, growing really well, has a great, great, smart CEO, just like the name. That's why I would tolerated the drawdown and broke some of my rules to hold it. Lumen, I see a technical breakout level to 13.9. Do you have an overall valuation target you shared? Quickly scan it and see one. Yeah, Gradix, look, so for Lumen, let's actually pull up the FinViz. Again, or hold on, this thing is gonna mess it up. Hold on, I'm just gonna do it on my phone because this browser's been shit. Uh, so Lumen right now trades at zero point 0.7 times sales, right? They trade at an 8.8 billion market cap, doing 12.4 billion in sales. They trade at 23 times price to free cash flow and about a 10x EV over EBITDA. I think this thing could trade at 2x sales. Um, if they're able to turn the core business around and begin to post growth, I think this could thing could trade 2x sales. So from here, that would mean the stock trades 15 or 16 bucks. I think would be a reasonable target. I don't like to do price targets, but you're asking it in a more appropriate way, which is a valuation target. I think there's a scenario where this thing could easily trade at 2 times sales, especially if they continue to resolve the debt load. Because this is less about, I think, the business on a quarter to quarter basis and is more about the opportunity of their fiber network. Like, remember, for 5 years, no one gave a shit if you're building up fiber. It was viewed as a liability. It was like, okay, you're spending billions of dollars to build national fiber. But now that balance is shifting because now you have data centers that are getting built everywhere. And those data centers want fast, low latency connection, right? And so now fiber's importance is kind of being pulled back into the picture. And so I think that forces a re-rating on these names. Is why the telecom names I think have been doing so well. So yeah, I think 15, 16 bucks is a reasonable target. You said there's an extension of 13.9. Maybe that would be a better technical target and more tighter on the valuation. But yeah, that's what I'm thinking, Gradix. Do you like PSIX here from the technical standpoint? They have a class lawsuit on their CapEx, which I think is kind of BS. Yeah, there's a lot of issues with that name. There's like I think some China issues too. I forgot. I think there's some ownership group. I looked at this name a bunch. The chart's great. Like, I'm not gonna hate on this chart, man. Like it's still a nice chart structurally. Like look, like this structure here is like really nice. Um, this is just a complicated story. I've looked at this name several times and has never been able to like grasp an enormous amount of conviction. So I think it's an interesting stock. I've looked at it quite a few times, not recently, but in the past I have. It doesn't blow me away. CDZI chart, I don't even know what that is. Or maybe I do. Oh yeah, Cadiz, I know this. Um, oh, kind of a make or break moment here for this name, right? Moving average is stacked on top of price, pushing it down into the 200. I mean, as it's currently constructed, this looks more like it's going to resolve down, right? One, two, three taps of that. It looks like it's going to resolve down, but you can't be sure. You could get a gap up here. And the thing with these types of points where stock's sitting at the 200-day, a lot of short-term pressure downward, these can be very indecisive points. Like, I don't think this is actionable, actually, to be honest. It's a toss up because you either get a gap up here and it goes from potentially dangerous chart to gorgeous chart with one candle, or you break down here and then it's a stock you want to stay away from. So I say this a lot. This might have to be one where rather than buying it at 483, it's a better buy above 505. I know when I say that, sometimes people are like, what? That doesn't make sense. Why would you want to buy stock higher? Well, in this case, you're buying it 25%, 25 cents higher, and you're taking out the risk of the stock getting shoved below the 200-day, right? It improves your risk reward. sometimes to buy a little bit higher after a stock has retaken key levels. So if I were you and I was looking at this name and I want to buy it, I would rather buy it above 505 than at the current spot. That's just me. I'm not saying not to buy it. It is at the 200-day. Maybe it rips off of the support. I don't know. I don't know enough about this name in terms of the near-term catalyst to tell you that. But I think spots like this are not actionable for my taste. I want to see a resolution candle first to indicate to me which direction the stock wants to go off of the 200-day support. That's how I would think about it. Of all the CPU designers on public markets, which one do you think is the best setup? He's been picking up steam and outperforming stocks. Yeah, I mean, I think ARM has a hell of a technical setup. I haven't looked at it in a while. Like, yeah, that's gorgeous. Um, I wouldn't be surprised to see ARM. Like, look at this. God, fuck, that is really pretty. I don't know. Don't make me buy ARM, Sam. But this has a hell of a chart, I think, for my taste. Like that is gorgeous, right? That's just pure like multi-year consolidation, coiled up, ready to do something. Like it gets more obvious when you compress it like this. Brutal stock to hold though. I will say that, right? Like who wants to go on this roller coaster? Like that is a brutal stock to hold. You go to fucking 188 and then 2 months later you're back down at 80, then you go back to 168. Like, you take 50% drawdowns like they're nothing on this name. So a hell of a volatile thing. It ain't fundamentally attractive. Last time I checked, I mean, let's see. I don't know how quickly they're growing. I mean, they're growing pretty fast, right? 26% clip, but it trades at a forward P of 76, trailing P of 220, 37 times sales. It's not fundamentally attractive to me at all, but this is hell of a chart. I'm not gonna like sit here and lie to you and say it's not a nice chart. QCOM, it's all right. And it needs to do some work. Like this is not bullish structure yet. Could be two more weekly candles to the upside. It could look pretty great, but you gotta wait here. This is a be patient situation on Qualcomm. Again, the daily, like these are signs of a bottoming, but it's not always guaranteed. You do have a recapture 921 here pushing into the 50. That could be explosive. Like a little bit of a better volume profile in that buying, but um I don't know. You could if you want to just be like, pretty straightforward, you just buy here and then set a stop at the 21 EMA. Pretty straightforward risk reward there. And if it bottoms there, fantastic. You win big. If it doesn't, you lose like what? $4, just nothing on a $134 stock. So yeah, fine. I mean, when you have a stock like this that's doing something like this, it ain't hard to set up a risk reward trade. You just say, look, I buy it here close to the 21 EMA. If it gets a daily close below, I'm out. I'll revisit it later. If not, and it breaks out over the 50, fan fucking tastic. You're dancing in the streets. Me want HII. Too late to buy? Nah, man. I mean, yeah, it doubled from when we bought it, but like, is it too late to buy? I mean, I averaged up on HII a lot. Like, I'm only up like 60% on the shares because I averaged up so much on HII, right? You guys remember I exercised those contracts I had. Um, I mean, it ain't like super expensive like a lot of other stocks out there. Is it cheap? No, but let's go look. Like, yeah, it's trading at a forward P of 19, growing sales at, basically a 10% clip, going EPS at a 30% clip, backlog expanding violently, trading at a price to sales of 1.2. HI is chilling, man. I don't think it's a bad buy here. A lot of times when you guys go, oh, it's doubled from your price, like, can I buy it? Like, yeah, you can still buy it. A lot of people miss VIAVI this year because I bought it at 14. It was at 18 at the beginning of the year, and people thought that was too high for my price. Like, you don't have to get my entry on every fucking stock. Like, I hold stocks for months, you know? So, um, if I'm still holding it, I'm holding it for a reason. You should think that about my portfolio. You should not just look at my portfolio and say, you're up 100%, I can't buy it. I'm still holding everything I'm holding for a reason. Everything in my portfolio is there for a reason. I'm not just hold stuff for funsies. But yes, HI is not expensive. You look at the rest of the defense tech universe, pretty expensive. Software companies and verticals that make them particularly embedded sound valid as a theme? Yes. I think a lot of software stocks will recover if they are embedded, if they have very, very high moats to entry, very, very specific use cases, huge network effects. Those software stocks will recover. But software as a whole, like I have no interest in owning IGV. And I've said that many times. Like I think AI will be a major killer of a lot of software, if not 80% of it. But there will be winners. Yeah, there will be some software players that are so embedded, either regulatorily or in the sense of who they're exposed to. They're so deeply embedded that they'll be able to brunt off that, So yeah, I think that is valid as a theme, J squared. Thoughts on Skyworks chart? I'm interested in adding, or no, that's not Skyworks. That's yeah, that is Skyworks. Looks interesting. I don't love charts like this that are like trying to bottom because they can end up being real choppy here as long as they're below the 200 day. They can end up being like a little bit of a nightmare to hold. I prefer trending stocks with strength. This monthly chart is not that pretty. Okay. This is a monthly downtrend. So you need this to break, in my opinion. You need to break out of this monthly downtrend before this becomes interesting to me. So that's a pretty straightforward answer. I know you said panel to free up some cash a little while back. I'm curious, how do you feel the charts look at this time? Yeah, look, I like all the names that I own and share theses on. Sometimes I sell them for portfolio management decisions. That's what this was. Yeah, I still like panel. And yeah, it's done a nice recovery here. Recaptured all the short-term moving averages. Now it's sitting below the 795 spot. Back above 8, this thing's back in play, right? And look at the weekly chart. This is a gorgeous weekly chart. Fantastic. So yeah, just because I sell something, guys, doesn't mean it's like forsaken and a terrible, terrible name. That's not how it works. Um, it can do very well either way, whether I'm in it or not. And the monthly looks great too. So yeah, Pangea Logistics, no problems. Looks fine. I have made money on Nvidia, but it has become overweighted, and I feel like I'm missing out on names that are more growing more aggressively or have more upside. I love the name and plan on keeping it in the portfolio for the long term. Why are you not in Nvidia? I just don't buy big stocks, man, my man. I own some mega caps from way back in the day. I just don't buy big stocks. I'm a mid cap guy. That's the simple answer to your question. Nvidia is great. As far as what would my advice be for trimming a name if you're having a hard time, my advice would be base it on how much that money means to you. If the money means a lot to you, take some of it or take all of it. If the money doesn't and you can afford to let it keep running, let it keep running. If you have a thesis, sell when the thesis breaks. I went over today on Spaces. For those that didn't listen to my Spaces, go to Stocks on Spaces page and listen to the recording from today. I went on a big rant about this, about position management, when you should sell. I talked for like 2 hours about it. So I don't want to repeat everything I said, but go listen to that and it'll help you out. Considering the power grid and AI infrastructure build out, have you considered copper miner plays? Nope, I have no interest in that portion of the supply chain. I want stuff in the middle. I don't want like the copper to own the copper itself. I want to own the specialized products in the middle, the build out products. Because those are what see a real price squeeze when they're in demand. Briefly, you're interested in CRML. It's gone down massively. How does the stock look to you now? I don't know. I sold it, I think, at a pretty good time, whatever, the 13th or something. But yeah, it's back down at 9. Monthly chart still looks fine, but this was more of a meme trade for me, which is rare. But I just saw the rare stocks heating up at that time, and I wanted to get a little high beta exposure, and just didn't work out. That's all this is. But yeah, it looks fine on the monthly. Weekly looks all right. Daily could use. Oh, daily looks pretty good here too, actually. They all look pretty interesting. Some sort of big move coming on this thing. Look how tight all the moving averages are. Something's coming on this thing. Big, maybe bad or good, but I don't know. I'm not gonna get back in it though. How do you recommend newer traders or traders with small ports incorporate options? Seems like options provide so much flexibility and upside with a smaller port. Buying 3 to 4 contracts doesn't seem reasonable. Why do people say this? What do you mean buying three or four contracts doesn't seem reasonable? Why does it not seem reasonable? The number of contracts you're buying should be based on the size of your portfolio. Like a dollar is a dollar is a dollar. Like if you have a $10,000 portfolio and you go up 100% on a year, you're still up 100%. You can't be like, I only made $10,000. Your portfolio is $10,000. You're not gonna make millions of dollars on a $10,000 portfolio. This is the cancer that fucks up new traders. Like, you know, when I go into a trade, I'm not trying to brag, but yes, I need to make six, seven figures on the trade for it to affect my portfolio at the very least. So I need to put in a huge amount of size. I need to buy hundreds of contracts. Like I always buy hundreds and hundreds of contracts because I have to. Otherwise, it's not going to move my portfolio. For somebody with a smaller portfolio, you can't do that. Then you're going to blow up your whole portfolio. If I buy 500 contracts and they go to zero, my portfolio goes down whatever, a percent and a half, 2%. If you buy 500 contracts and you have a small portfolio, your whole portfolio is gone. So, yeah, if you want to learn to trade options and you have a small account, you have to buy one or two contracts or three contracts or whatever it is you can afford. I mean, it just depends on the size. But yeah, that's a silly question, to be honest, because if you want to learn options trading, you have to start with the amount of money you have. If you have $5,000, $10,000, $20,000, whatever your account size is, you cannot just magically say, no, I want to get rich quick, and three contracts isn't going to get me there. Three contracts is 300 shares. So yeah, I mean, I don't know how else to answer that. There are 60 plus companies developing SMRs. Picking the eventual reactor design winner is highly uncertain. Outside of LU and BWXT, do you see opportunity in the handful of companies supplying nuclear components that are scarce, tightly regulated? Yes, I've owned Mirion in the past. I think Curtiss Wright is excellent. They're a little bit stretched on valuation now. I have owned Flowserve in the past. We actually did an earnings trade on it last year that won really well. Yeah, I like all those stocks. I think nuclear infrastructure is a great investment. So yeah, I think those are great. Curtis Wright, Marion, Flowserve, yeah, all the names you mentioned, fantastic. Even Emerson, yeah, I like those. I have no problem with your line of thinking there, Fidelity. What do you need to see in order to deploy margin and open new good sized positions? Or with the market showing you green light, have you seen enough and just waiting on good entries? I mean, I've already started deploying margin. Um, I'm just waiting on good entries. So yeah, just waiting on good entries. That's discipline for me. Trust me, it's annoying for me to watch stocks that I want to own rip. It's always annoying. No matter how much experience you have, that's always annoying. But I don't chase stuff, so I won't. That's particularly why I never take big losses. Like I never have big losses because I don't allow them to happen. You're in control of that. Like the reason the market, whenever people compare markets to casinos, I always laugh because there are no casinos where you can control risk the way you can in markets. You can always control your risk. You decide how much money you're willing to lose, not the market. A lot of people blame the market for that, but it's not the market's fault. It's your fault. You oversized. You had no risk tolerance. You had no hedges in place. You had no counteracting positions. You had no diversification. If a position kills you because it goes down 20%, it was one of those problems. It's not the stock going down 20% that's the problem. It's your management and sizing and distribution of assets that is the problem. So you have to wire this, laser this into your brain. If you do not size appropriately and you do not manage risk, something will kill you along the way. Something will. It might be the stock that you least expect, but you will eventually get a hammer down from the market if you play with risk flippantly. Where you play with it, you full poured everything, you're all in. One day you're going to get a stock that knifes 40% on some crazy bad news and just destroys your whole portfolio because you full ported it. Don't ever put yourself in that position. You can make tons of money. I've made millions and millions of dollars in the market. Okay. Multiple millions of dollars. And I have never traded like that. Never. All of the money I made in markets, all the big money I made in markets came when I had a distributed portfolio that was sized A, B, C, D, E appropriately across the board. going in with 3, 4, 5% weighting, not 50, 60% weighting. That's how I made all my money, not from swinging the bat for a home run every time. So those are the conditions that you need to employ to make real money. Taxes finish. How do you handle your taxes? My accountant handles my taxes. I don't answer tax questions in here. My accountant handles my taxes, but I paid a huge, huge tax bill this year. It made me sick. How do you feel about AOSL on the chart? It looks extended on the weekly. It looks tight on the moving averages. Good setup technically. Look, I trust Mystic with my life, so sometimes it doesn't matter. But yeah, this chart looks great. I'm not in it, but it looks great. And what do you want? Ripping through the 200-day moving average is curling up. Is it extended? Yeah, it needs some rest, but looks fantastic. But Mystic is one of my favorite traders on the planet, so I don't ever really worry about his picks, and I think he knows what he's talking about. Um, do you expect to get any CPU beneficiary names before the existing incoming shortage? I've looked at a couple, and nothing really blows my socks off, so maybe, maybe not. There's one I'm looking at. I can't share it right now, but if it comes to a spot, I'll buy it. Can you review BB chart, please? Nice. Very nice. Wonderful recovery off the lows. Last time I looked at this, the valuation was pretty reasonable too. Let's see what that looks like now. No, not reasonable. Nah, it's not a reasonable valuation or anything. But yeah, chart looks nice. Anything ripping through the 200-day like this with, you know, enthusiasm, it's not going to be a bad opportunity. You're just going to maybe potentially want to wait for a pullback so you can get a nicer entry. You don't want to, this is chasing. You buy this, is chasing. You have to wait for it to settle out. Might settle out higher, but you have to wait for that. That's what the discipline I was referring to earlier. I used to do more covered calls. Now I don't really anymore because now I'm more conviction driven. The more conviction driven I've become, the less covered calls I do because I don't want to lose shares. So I don't really do them much, especially considering the type of market we've been in for the last 3 years. I don't want to sell covered calls in a bull market and just get my profits taken from me. What do you feel about Oracle here? Valuation is fair. Yeah, I agree. The valuation is fair on Oracle and Dell. I was actually looking at Dell yesterday. I was kind of pissed when it ripped today. But Oracle looks great. Dell looks even better. Dell just acting like a complete champ. Um, wow, fake out candle yesterday. I should have bought that. Should have bought calls on that. Anyway, yeah, they look great. Dell and Oracle look great. They were neglected for some time, but Oracle is very, very fair, I think, valuation. But look, the one thing with Oracle is you're tied to an enormous amount of debt, an enormous amount of obligations around OpenAI. So there's a risk there. Things go badly for OpenAI, it's going to go badly for Oracle. Current view on the 3D printing metal market. Yeah, I think it's interesting. None of the stocks are quality to me. They all have some kind of problem in the background that annoys me. Velo, I love Tut. Tut's another guy I love. I've known him for years. Tut's one of my favorite dudes out there. He loves it. So, I think he's probably onto something. Him and Mystic both like Velo. They're onto something. Those are smart guys, and I'm never worried about those guys. What's in the red cup? I knew everyone was going to ask that. It's Coke Zero, just ice in it. Um, I'm a Texan. We have a lot of red Solo cups in our houses. Um, but yeah, Nico mentioned that Amcor is technically a CPU beneficiary because of packaging. So Amcor's beneficiary. Amcor wins from optics, photonics, CPU, GPU. Amcor wins because they're no set packager, so they have exposure to everything. That's a beautiful thing about Amcor. So yeah, great point, Nico. I already have indirect exposure to CPU through that. Any thoughts on rare earths? No, man. I've been asked about this a bunch. I'm just not getting back into the rare earth trade. I think it's interesting. I think a lot of the stocks are interesting. We did well in it last year with UUU. I'm not getting back into that trade because it's just like I can't ground myself in anything. All those stocks are speculative. I can't ground myself in the valuation. I like to be able to sleep at night knowing The valuation's reasonable, the chart's good, the theme is relevant. That's what puts me to sleep at night. And when I can't do those with those names, that's why I also don't buy meme stocks or like the popular Twitter stocks that a lot of you are talking about in the chat sometimes are ripping and ripping and ripping. It doesn't give me FOMO because I can't put size into those. I can't put millions of dollars into some meme stock and just hope it goes up, you know? So I don't even worry about that. What do you feel about Oracle here? Yeah, somebody already asked that. Have you ever checked out Powie? Yeah, I know Powie. Um, it's an interesting name. I've looked at it a few times. It's acting really, really well here lately, and I think it has a pretty superb formation here. You get a golden cross right here. This would have been a great time to buy it. Retest of the 200-day with a golden cross happening. This 44 area would have been a great time to buy it, but I'm not gonna chase it here. I'd like it to base out a little bit more. But it looks excellent. Looks excellent. Looks like it's about to break out of the lows here. Looks really good, actually. Looks great, man. If you're long on that one, I would rock with it. I don't know what valuation looks like. It's not crazy. Sales, sales down year over year. Uh, it's not bad. It's not a crazy valuation. It's not cheap either. Sort of in between. Great technical structure though. Great technical structure. So I can't be too mad at you wanting to own this one. Looks great, man. And you're right, they do have a monopoly, so it makes them interesting. Thoughts on IMOS? Yeah, I do. I've looked at that one. I've looked at that one. I was actually talking to Mystic about this a few months ago. Oh wow, big move today. Yeah, I mean, you're another guy. I'm not worried about Wall Street Engine. You know your stuff, brother. So you know this looks good, and it does. Yeah, yeah. I mean, looks great, man. If you can get a retest of this 45, phew, be great entry. Little illiquid though, huh? Like the way it moves. I don't really like that. I don't like how illiquid it is. That's my only kind of issue with it. But like this action is like kind of like weird, but gap, gap, gap. Yeah, I don't know. It trades a little spotty for my taste, but I mean, comes back, finds support at this 45 area. That's a rip. Forward valuation is pretty reasonable on it too, huh? 17 forward, 9 times EV over EBITDA, pretty much no debt, growing sales fast. Yeah, man. Oh, it's an ADR. That's why it's so illiquid, huh? Oh, wow. That breakout today was perfect, huh? That's a textbook look on that. Right over the local highs. That's textbook. Yeah, it looks good, man. Um, yeah, I already looked at SWKS Scotch earlier in the workshop, so you can rewind and check out that look when I upload the recording. Thoughts on Circle? Yeah, look, I've thought a lot about Circle because I am kind of bullish on the stablecoin theme, and I want to get like exposure. This looks interesting here, man. Uh, looks interesting. Again, another one where I can't really wrap my mind around the valuation, but I'm not sure that this one is one that really even trades off valuation. I think it just trades off sentiment more than anything, but it's not crazy expensive either. It's got a forward, I think, of 60, which is not cheap, but um, trades like under 10 times sales. I mean, if you think you know, they're growing sales like pretty insanely fast. So for what it's worth, that's pretty good to see. They're running like no margins on the sales, so that's notable. I mean, I think they run like a 6% gross margin on this business, so it's not like a very super attractive business, but um, yeah, I have been thinking about this name. That's a nice little formation here. That's going to resolve, I think, pretty. Wow, it looks better on the weekly. Looks good, man. If you're considering a long down here, take it. Just set up some risk controls, like maybe You could actually take it right here and just set a daily close stop at the 21 if you want to keep it real tight. If you want to be a little looser, maybe, uh, well, it's played with the 50 day. This thing has a tendency to play with the 50, so maybe I wouldn't use the 50. Yeah, I would just be a little tighter if you want to maybe get in here, say daily close below the 21 EMA, you get out. And if you get the break over the 200, great. Not a bad idea. When natural gas names like Next and VG get closer to moving average, no, I do not want to own nat gas names. Nat gas is a widowmaker. I hate the fact that those stocks trade on the asset. I've thought about it. I thought about it real hard a couple of months ago, and then I just decided not to do it. eToro has cooled up hard this week. eToro, the valuation seemed great. But have you seen this price action previously? Yeah, it curled up this week with the rest of the brokerage apps because of the PDT rule. Um, I think that's what you're referring to, right? eToro. Am I wrong? Is that not that ticker? Yeah, it is. Oh, no. What am I doing? There you go. Yeah, it's just a PDT run with Robinhood and Webull, same thing. Looks great on the weekly, poking its head up. Yeah, not bad. I mean, what is this thing? I imagine this thing trades pretty reasonably, right? Yeah, it's got a very reasonable valuation. Wow. I know they were sitting on so much cash. What? Is that right? They're sitting on $1.2 billion of cash, a 3 billion market cap. Is that actually right? Ah, but sales are down quarter over quarter. What are sales? Oh, year over year, they're up. Interesting. I didn't know they were so cash rich, and the valuations they're trading at 2.3 times cash. Interesting. Anyway, yeah, that I mean, yeah, I would say go for it, man. That looks solid. I don't see a problem with that. Chart trying to bottom, pretty fucking reasonable valuation. Such a low P theme. Would you still stay away from MU? No, man. Look, I just don't buy stocks that have gone up a shitload in 3 months, like that are just ripping their face. I mean, I don't want to say never, never say never. There are exceptions to that. I have traded momentum names in the past, but no, I have nothing against Micron. I've said many times I think the memory thesis is sound. I just don't have exposure to it for whatever reason. I thought about Micron a lot last year. I should have bought it then. If I'd bought it then, I probably would still own it, but I'm not going to buy it now and just sit around and guess when the end of the cycle is going to be. I do think this will be a structurally longer cycle than previous ones. I think the new revenue highs are proving that. A company under the same holding company as one I work for specializes in rugged compute solutions. Their backlog is super strong and growing, but their margins are compressing mainly due to cost and availability of memory. Do you think OSS is going to continue expanding margins in this environment? Margins could settle down. That's fine. They can be a 35% margin business instead of a 50% margin business if you want to. But no, I think one of the tailwinds for margin, what they're doing is they're specialized built-in solutions. They're not selling stuff off the rack like a commodity. They are going to customers who have a very specific need and building compute solutions for that need. Like with their Poseidon PA-8 aircraft program with OSS, the reason they want a follow-up order for that is because it worked well. They're building those compute systems in the Poseidon aircraft. That's a tricky thing to do. You can't just get a bunch of Dell or HP installers to go plug in the GPU, right? That matters. Design in solutions matter, right? It was the same thing I was saying about BDC. If you go and read my BDC thesis, I was like, look, this is being valued as an industrial supplier, but really they're a design in industrial tech company. And when you have that pivot and that sort of change in lens, switch up in the lens, it can lead to multiple expansion. So uh, I'm using a lot of tools like I'm blessed to say I'm up 20%, which is not crazy. Dude, you've been only doing this for 60 months. If you're up 20% in this market environment, that is crazy. Fantastic job. Lately, I've been feeling too cocky and overconfident. I'm worried that's going to cloud my judgment. How do you remain level-headed? Um, I've been humbled a lot over the years. So I get my level-headedness from the fact I never get too high or too low in markets ever. Even in market crashes, I don't get too low because I know what's on the other side of them. And the same way that I don't get too high when stocks are going parabolic, like I saw IRDM today, like I wouldn't be surprised if that thing pulls back next week or tomorrow even because it's been gone so parabolic. I just kind of know like how to expect and how to feel. So I don't get too out of my seat about it. How do you get there? I wish I could say that there's some exercise you could do or practice. The truth is experience is how you get level-headed. You go through the ringer and you get shot down and picked back up over and over again, and eventually you're like, okay, I know what this game takes. And I'd say my stomach got stronger because of the same reason, right? Like I didn't have used to have a strong stomach. I would get shaken out real easily of stocks, but I developed a strong stomach because it got you know, I threw up enough times. Like, my first account when I was like, what is this? I'm, 12 years ago now. I was like 21. Um, the account that I blew up was like all my money, and it was a six-figure account, and I blew it up. And I was like depressed for weeks and weeks and months. Um, and then I made it all back the next year. So you're gonna go through these ups and downs like a roller coaster. It's part of the game. The greatest ever, in my opinion, Druckenmiller. I think he's the greatest ever. His interviews says all the time, like, we were talking about it on Spaces today. Like he's had moments where he threw up every week from the drawdowns. Like you're talking about the greatest of all time was so perturbed by the volatility that he was throwing up, literally vomiting from the drawdowns. Um, and that's the best ever. So you don't think you're going to get nervous? You are. You're going to get nervous. You're going to get shaken up. You think I'm just always like, no, I have moments too where I'm like, oh, fuck, that hurts. When I upsized Synaptics and then it fell another 10% the next week, that fucking hurt. You know, for me, even though it's a 5 or 6% position, that's a lot of money still in my portfolio. And so, yeah, it sucks to see six. I mean, in April of last year, I had a multi seven figure drawdown. In the correction this year, I was down basically seven figures in a 5% S&P drawdown. I had to sit through that and be like, sort of clench my teeth and just say, okay, fuck it. And it's hard to do, but you only get more and more level-headed over time and with experience. There's no shortcut to that. Thoughts on NN? Yeah, I saw that upgrade. I just don't know enough about their business to give you real detailed thoughts, but great Oppenheimer upgrade and crazy move today on NN. Saw that. Yes, I'm planning to add to the options on both Lumen and CTS when they come to a better price, or not better price, a tighter moving average kiss. Which of one of the smartest persons you've talked with so far, like top one? Because you mentioned it were really I mean, I don't know, man. I've talked to a lot of smart people over the years. I'm not going to rank them. I don't know who the smartest person I've ever talked to is, but I try to surround myself with smart people. So that's something I've always tried to do. Options premiums jumped 10% to 30% after you release a new pick. I've been following you in and paying up, but I'm only a few contracts waiting for a pullback. Is this a good strategy or should I go in heavier in the full release? I mean, that's tough, man. I wish stocks didn't spike when I bought them. I know there's a lot of people on Twitter that love when their stocks pump. I wish they didn't. I wish everyone would just get in nice and easy and just wait around. I I don't know. I don't know. I get the question all the time. I don't know what to tell you. Like there are some stocks when I buy them, they go and never turn back, right? There's other stocks when I buy them, like Synaptics, which give you better entries than I got. There's other stocks like MITK, which go back to my entry multiple times and give you another opportunity. So, I mean, it depends on the stock, depends on how much you like the thesis I share. Maybe you take a starter when I alert it and then you scale in when the opportunity is better. But markets have a really good way of giving you opportunities. Amcor for the first couple months came back to the 20s many times. ENS came back to the 115, 120 range many times. Viavi came back to the 14, 15, 16 range many times. Like you'll get another entry. You don't have to buy it at exactly my price, but wait for a smart entry. Stock pulls back into the moving averages, gives you a nice, comfortable setup. Buy those opportunities. You don't have to chase with your whole portfolio and stocks rip roaring because I learned it. Look, the product of me being so consistent over the course of years has built a reputation to where people just want to ape into what everything I buy. I don't want you guys to do that. I know I'm no matter how much I say that, it's going to happen. I've said that, I don't know, every month basically for the last 7 years that I've been on Twitter. I've said it. People still ape in. So I can't prevent it. People are just excited, eager, they want to be in my stocks. So be it. But there's always going to be another opportunity to add stuff. No, I have not trimmed that name, Average Joe. It just got displaced by higher performers. Amcor, ENS, VAV were all bought at similar times. They all had options. That's why the weighting went down instead of up. You know what I'm saying? So that's the difference. It was just in the portfolio in a time when there was a ton of options and it did not have any options. So even though it did well, the other positions that had options did way bigger leaps in terms of their weighting. That's why ENS's weighting went down so much. I didn't sell it. I didn't sold any. The thing about how much the portfolio has gone up since November. The portfolio is up 10x in 1 year. I'm up over 1,000% in the past 1 year. So the size of the portfolio has increased by 10 times, 11 times in that period, right? It's up plus 1,000%, aka 11 times. Stocks, even if they go up 30, 40, 50%, are going to get left in the dust if they don't have options. So that's what happened with PLPC. It just got compressed by relative weighting because what was also happening right after I bought it in October, November, December, ENS, VAV, Amcor were ripping, and they had big options complements to them, 10, 15% of the positions in options. So that's what happened. Um, no gold or silver. Why? I own plenty of physical gold. People have asked me this many times. I have a lot of physical gold bars. That is my gold investment. I don't feel the need to have gold in my stock portfolio. I have physical gold. The one mega cap you like, Lily, is giving you a decent opportunity here. As I would say, you haven't entered the 200-day with 50 weeks. Well, amazing. I'm missing something on the chart, though. Let's see. Thanks for bringing that up. I haven't looked at Lily in a while. Oh, yeah, dude. Thanks for bringing that up, JS. Yeah, I wish the moving averages were below here instead of above. That's the only caveat. You have moving average pressure to the downside on a 200-day, but yeah, that could be oh, dude, you have 50-week support there too. Oh, dude. Well, maybe mega cap time for Stock Talk Weekly. Dude, what? Damn, those options are so cheap. Okay, I have to think about that tomorrow. Thank you for pointing that out. Take a look at EVLV chart. Okay, there's like a ton of questions still. So as of new, don't put any new questions in the questions channel. Let me get through the ones that are already there. Just hold on a second. And I see like 15 tags in the chat too. So give me a second, guys. No more new questions. Just pause. Let me get through all the ones that are already here. Hold on. Take a look at EVLV chart. Yeah, EVLV, man. Look, I've liked this name. I think Mystic did a great job of covering it last year. I think Wall Street Engine has done a fantastic job of covering it this year. Both those guys are very smart. You should listen to them both. But it's a great formation here. You guys know I like this formation, right? Short-term moving averages pointing up, price riding the short-term moving averages, overhead relatively flat 200-day. You guys know I love these formations. I actually think the stock's gotten cheaper, hasn't it, because of the growth? I don't know if Wall Street Engine's on here, but he would know better. But I think this has gotten cheaper. Yeah, man, it has a point 0.8 like oh no, that's Lily. What am I doing? Why is this not updating? Yeah, I mean they're not profitable yet, but hella good growth. Yeah, the sales and EPS trend is so nice on this name. Like the fundamental trend on this name is real nice. I just wish that like I don't know why the nets are so low. I guess because they're spending a lot. The burn's not really a problem. I mean, they're running a th negative 33 million net income. I just wish there was better margin conversion on this business. I think it's mostly an expansion thing. I have to go look at it. I can't tell enough from just looking at the balance sheet. I have to go through the filings and look properly to get context. But I wish the margins were translating a little better, at least on the operating side. I don't know if these figures are right though. I do like that they run a 52% gross though with like running a 52% gross with growth like that on the top and bottom line is really, really excellent. It's a good growth story and a nice chart. I can't hate on it. It's not like cheap, but it shouldn't be. Growing like that, it shouldn't be cheap. So now the market has reclaimed all moving averages. You've been posting analyst reports this morning. You see and would you consider buying into them as short-term trades or day trades? CRDO was an awesome swing off that report. Yeah. Look, I'm posting in the Southside channel for you guys because you guys said you wanted that back, right? Remember I asked for a poll on that? You guys overwhelmingly voted that you wanted me to post reports in there. I'm not going to put the alert tag back on it, but if you guys want to look at the Southside channel in the mornings, Wall Street Engine posts in there all the time. I post in there occasionally. When I see two or three reports that are interesting, I'll just stack them in a message and post them in there. Yes, they are actionable sometimes. I'm not saying they're always going to go up. So, risks, caveats, and all that stuff. But yeah, I post them there for a reason. A lot of the stocks I've posted in there in the last few weeks have done very, very well. Some of you asked about that QMCO that I posted a few weeks ago that was in there. You're like, why are you posting this? Look how that thing's done. It's done pretty good. So yeah, the stock's in there. I posted CRDO that morning. It ended up going up like 20% in like a session and a half, 30%, I think, in 3 days or something. So yeah, there's stuff in there that I think is interesting. I don't post it for no reason. I look at all the reports. The ones I'm posting in there, I'm posting for a reason. I'm not just like, I never, I know I can talk a lot, guys, but the stuff I say in my journal and the stuff I say in like the sell side channel or whatever, that is not for it's not for nothing. I'm not saying it to like waste your time. I hate unactionable shit. It's why I don't have a Substack. I fucking hate Substacks. Like so much just reading, like just tell me the point. Tell me what you're buying, what you're selling. I don't need to read a novel about it. So I try not to do that. That's why my theses are very short too. You guys can go through my thesis library. They're all like a few paragraphs. Like I'm not trying to belabor the point. I'm telling you why I'm buying it. That's it. That's like what we do here. Why am I buying it? This is why. Here's a simple explanation. 5, 6 paragraphs. If you want more details, go to your favorite LLM and deeper dive it more. But uh, I'm very much on do as much as necessary, click as many buttons as necessary, say as many words as necessary, and do that. I mean, look, on one end, like my stock talk uniform, when I have my stock talk uniform on and I'm doing spaces, I have to entertain. Okay. So you guys like, I have to rant a little bit on spaces to entertain. But when it comes to you guys in the Discord, like my goal here is actionable material and education. Not like my X uniform is very different from my Discord uniform. Like I'm here to help you guys make money, not to preach. Like all the shit I said in this workshop I'm not talking out of my ass. I'm telling you very specific things about what I'm looking for in technical structure, what I'm looking for in position management for a reason. Like all of these things about the setups, the moving average pinches, where you should buy, where you shouldn't buy. This is actionable information, not, oh, hey, this is what I think about the markets. Let me talk to you about for 2 hours about oil prices. We're not going to do that here ever. That's never going to be a thing that we do here. Um, if you look at charts of MRVL and OUST in the context of the robots themes, can vision and perception be categorized as a distinct segment? Yeah. Yeah. I mean, OUST, I think, is a great company, and LiDAR. I think that there's still a debate about, this autonomy revolution and if Tesla will be able to do it with vision or not. I think they've had terrible progress lately. I'm like wondering what the fuck is going on with the scale of their robotaxi program. Maybe it is an issue. Maybe we do end up needing LiDAR. Who knows? But I think there's that debate that kind of is an overhang on the LiDAR trade. But yeah, I mean, OUSD's, I think, a very, very solid company. They had a crazy quarter last quarter. Um, and stock's been bouncing around here. Very similar setup to the chart we just looked at, right? Trying to come back into this 200 day and reclaim it. Um, Hell of a chart. Wow, weekly looks great. Look at that weekly. Looks great. So yeah, that's beautiful. Look at that. 200 comes all the way back down to price. Every moving average rips through it. This is gorgeous on the weekly. Really nice on the monthly too. Yeah, man, this is a great chart. No complaints. It'd be even better if the daily was above the 200, but it's pretty damn good chart. Pretty interesting chart. Thoughts on the EV tolls? I don't know. I mean, I think it's going to be a thing. I just can't wrap my mind around the valuation of them at this point. I think if you're going to buy either one, you buy Joby, not Archer. Um, Joby looks like it's trying to get back into form here. Needs work. Needs a little work on the monthly and daily. Needs to recapture some of these monthly and weekly moving averages. Do you have a Druckenmiller book to recommend? No, just watch his interviews. I don't read books. Books. I have a very unpopular opinion on books compared to most nerds. I'm a nerd, but I just think books are a waste of time. Like, just tell me what I need to be told. I don't need to read a novel. If you were to size up Cena, would you be adding back options exposure? Yeah, probably. If I size up Cena, it will probably be with options. How are some people on X always right with their charting tools, such as Blue Diamond's volatility hold? I never understood. They're not as right as you think they are. People who are doing that crazy charting shit are not as right as you think they are. They just share when they're right. You've been fooled, fancy catch up. I don't know what the hell Blue Diamond is or a volatility hold, but whoever convinced you that they're doing something consistent with that is fooling you. I invested into CCCX, now INFQ at 1228 back a while ago. I wanted some quantum exposure and personally my favorite quantum hold, so thank you. Long-term hold for me. Nice. Amazing. I don't even know what that's at today. What is that in the 20s? What is it now? Oh, yeah, it's INFQ. Ticker change. Oh, yeah. Banger. Whoa, 15. Nice. Congrats. Chart looks even better now. Leo, quit it. Um, yeah, looks great. You mentioned you blew up your first account 12 years ago. Do you mind sharing which mistakes led to that? Man, I don't even remember all the mistakes that led to that. I was just a degenerate gambler back then, like everyone else at that age. Um, I just didn't have rules. I was like full porting shit, trading OTC, trading all sorts of like meme stocks, and just was less mature. And I wasn't experienced. I'd like when I was 21, I had 3 years of trading experience. I thought I was hot shit because I made a lot of money in the first 2 years. Then I gave it all back in the third year. Um, that's your tuition. I like to call it market tuition. Since I paid that tuition, I've not blown up an account, you know? Um, and I've compounded my wealth dramatically over the last 10 years, dramatically. Like, I had decent money 5, 6 years ago. Now I would consider myself wealthy for my age. Um, and, my portfolio is 20x, 22x in 2.5 years. So yeah, I've gone to a completely different position from being disciplined. Um, I get better every year. My returns show that too. Over the last 5, 6 years, I've had triple digit returns in every bull market year. Even in 22, I outperformed the market and had a positive year and everything went down because I had ARK K puts the whole year. I was hammering ARK K puts was my largest position. And you can go back and scroll through this Discord to 2022. The only thing I talk about the whole year is Art K puts, more Art K puts. Like I'm not just saying it to say it in hindsight. You guys can go back. It's all in the Discord. But yeah, I know I'm good now. Like when I was 21 or 22, I thought I was good and I wasn't. I thought I was good because I got lucky for 2 years. Now I know I'm good. And that step change is when you really start making money because now I have a tremendous amount of confidence in the stocks I pick and how I manage them. And I'm good at portfolio management. Like I know where I need to trim, where I need to generate cash, when I need to step off the pedal, when I need to hit the gas, when I need to leverage, when I don't need to leverage, when I need to use shares, when I need to use both. Like these things you just develop an instinct for it. Like almost everything for me is now automatic. Like I don't look like when I go through charts with you guys on these workshops, I spend hours because I want to teach you guys. That's what I'm here for. But when I go through charts myself, like if I was doing this alone, I'm spending 5 seconds on each chart, like literally 5 to 10 seconds. I look at it and I go, yeah, it's good. Or I look at it and I go, no. Like when you when you get to that point, your of instinct, your whole process changes. Like 7 or 8 years ago, it was rules over process, or sorry, rules over instinct. Now it is instinct over rules every time. Every time. There's no exceptions. Like my gut is the rule book now. When I was 22, 23, my rules that I had built this set of rules, and I share a lot of those with you guys now about how I buy options. I still follow them as a rule of thumb, but not strictly and not set in stone because I trust my instinct more than anything. One more 10x will make you a billionaire. No, I don't have $100 million. I don't have $100 million, but no, I wish. Um, can you explain why you like the short-term break of the 921 EMA into the 200 EMA? Explain it to me like I'm a child. Um, it means that the incremental buyer over short-term periods is willing to pay more than the buyer over a longer period. That's what it means, and it's bullish. That all the moving averages are indicating to you is what buyers are willing to pay over a period. So your 9 and 21 EMAs are giving you an exponential view on the average price over a 9 and 21 day period. Your 50, 100, and 200 simple moving averages are giving you a basic average over a 50, 100, and 200 day period. So when you see these upsloping 9 and 21 EMAs into a flat or maybe slightly declining 200 day, it means that the short term buyers are excited. The buyers in this small period are excited, and those moving averages crossing over the 200 means they're willing to pay more incrementally than the average buyer of the last 200 days. That's all moving averages indicate to you. They're just an expression of the incremental buyer, the next buyer in line. That's all moving averages are. They're an expression of that. They're lagging indicators. They're not predicting anything. You don't misunderstand moving averages. Moving averages is not predicting anything. It's a lagging indicator. They guide you through price, though. They guide you of what is the next buyer in line willing to pay. Oh, the stock's below the 21 EMA. The incremental buyer is saying, no, I don't like I don't like this stock. The price the stock is paid over the average 21 days. And so that's a stock falling below the 21 EMA. So that's how you should think about moving averages. Like it is a signal to the next buyer in line of what they are willing to do. And that's why it's either bullish or bearish. I miss all your options moves. What can you say to make me feel better? Size them small so you don't miss them. And you don't have to sit there and worry about whether you want to buy them or not. Size them how I size them. Look how I sized RRDM and look what happened to it, right? And now it's become a huge position. So you don't need to put up a ton of size. If you're missing them because you're uncertain about the risk, size them appropriately, you know? So that should make you feel better and maybe make you not mix the next one. Can you review AMSC, please? Sure. Looks great. Same sort of thing, man, with a lot of these things are doing right below the 200. This one's pushing into the 50 month as well. Looks solid. Um, It's a name I've looked at before too. Superconducting wire. Very interesting. Looks solid. All right, let's hope that none of these questions in chat are repeats. How's Circle? I already went over that. SMR question, already went over that. Um, am I Jewish? No, I'm not Jewish. Uh, do you already cover OSS? Yes, I did. AVAV. Yeah, I mean, it's doing we looked at a lot of these names where they've like acted like shit and now they're recapturing the short-term moving average. Does it mean it's a great chart? No. Like, look, the weekly needs work here, right? We need to see like the weekly prove that this is a bottom. Like this is another one where would I want to buy it at 2.2 or do I want to buy it at 2.18? I'd like it better here. And the question is like, do you want to miss that $18? Are you willing to miss that $18? Like, you have to ask yourself that, like, do I want to buy better structure for a higher price? Or repeat that. Do I want to buy better structure for a higher price? Do I want better risk reward for slightly more pay-in? I don't know. I usually do. You ask me, I do. Okay. I'm willing to pay 10% more for the stock than when I look at it if the structure gets better, because then I'm taking less risk. Right? So think about stocks that way. Nope. I just left the stocks I trimmed during the Iran war fears. I just left them where they were. I didn't add back the exposure. If I add back exposure, guys, where are you going to find out about it? This was an audience. Everyone would say Stock Dog World Your channel, but you're gonna find out about it in the same spot, right? You're gonna find out about it in my journal channel. If I add something back, trim something, I'll let you know. Like really, really small trims, I don't alert because I'm not gonna be like, hey guys, trimming, you know, like 0.02% of Amcor that people are gonna be like, oh my God, he's selling Amcor. So little trims, I don't alert. But if it's a significant trim or a significant add back, I will. I'll always alert that. Like for example, if I say, "Oh, I'm reducing size on this position by 2%," and I want to add that 2% back, I'll tell you guys that. But if I'm making like, if I have 1,000 contracts and I sell five, no, I'm not going to mention that because the you guys already see how the Discord reacts every time I mention a ticker. It goes if I mention a ticker negatively, it dumps. If I mention a ticker positively, it rips. So what? If I share 0.02% trims, you guys would be losing your fucking minds. Um, Looking at grab crossing 50 when price here hits a 200 MA, is that what you typically look at? Yeah, I mean that's like, that push setup, the pinch setup that I talk about, but I don't know if that this has that. I mean, no, this isn't. That's not this at all. This is way too far from the 200 MA to consider it that. But yeah, I mean, it's trying to do something here. I think it's the nicest chart in the world or anything, but I just don't find this company to be as interesting as everyone else does. But like, yeah, I mean, it's sort of like this 50 month. It's sort of like kind of surfed it as support a little bit. I don't know. It's like not a screaming at me or anything. Yeah, I don't have a KTOS thesis. That was one I shared on live streams way back in the day. The format has changed over the years in the Discord, so not every position has a thesis. It's not that I missed it. If you read the note at the top of the thesis library, you would know that. Do you typically buy options on every entry? No. If I tell you I'm buying them, I'm buying them. If I don't, I don't. Sometimes, this is the only time you guys won't know if I have an option. If it is illiquid. If it's too illiquid, do alert it. Then I'm not going to alert it because I'm not here to pump and dump. If I alert an options contract where I'm the only one on the contract and the spreads are wide, then I'm just pumping. Like, so I'm not going to do that. But I will tell you guys if there's a liquid contract that I'm in, I always tell you guys. Or if there's um If I have options on a position, I'm going to tell you if they're liquid. So no, there are not options on every position. Um, and there are also not shares on every position. For example, IRDM had no shares. I'm posting the recording whenever it uploads. So when this ends, then we'll post the recording. All right, any last questions? We've been going for like, I don't know, like what, 2 hours and a half now? This is the longest workshop ever, I think. Could you check DVN? Want to know it is a healthy pullback. What is this energy name? Let's see. I mean, you're in no man's land. Whenever you're below like three moving averages in a row like this is not actionable. And again, in my view, there's going to be always some traders that disagree with that. You need to see a resolution here. You need a recap of the 50 or it begins a short-term downtrend. Now, you're probably seeing better support here, and you are a better structure here. I think 43 would be a nice zone to get back in, where you have this 21 EMA, 200-day confluence, well, 200 week, 21 week EMA and 200 week confluence there. Yep, and it also 90 cents away from the 50 month. So yeah, I think if you want to re-enter this or if you're looking for support, you look at the 43 zone right there. I miss a Zoom because of work. When are you posting recording? I'm posting recording when it's done. Yes, I covered IRDM at the very beginning. Yeah, I mean, the purpose of these guys is to make you learn. So if you watch these back and if you go through my other ones, you'll kind of get the message I'm sending over time, right? And the types of setups I'm looking at. Like we go over setups every time we do these workshops, you guys know what I like and what I don't like, right? So be mindful of that. I'm gonna post this when it's uploaded, and then we'll do another one next week. And just if you go and watch these back and you want to ask me questions, we literally have a 24/7 questions channel here for a reason. So I'm going to be sassy sometimes or snappy if the question is silly and you can Google it. That annoys me. But if you can't Google it and you want to ask me my opinion on something, be specific. I will be specific back. If you ask me a super broad, generic question, I'm going to give you a shitty answer because it's broad and generic, right? So I'm here to help you guys. I know it's gonna be tough love sometimes, and I can be kind of blunt and stuff, but sugarcoating is for babies. I don't think any of you are babies. You need to be 18 to have a account. So um yeah, I'm pretty sure all of you are grown ups and you can handle a little bit of bluntness occasionally. So I want you guys to learn. I want this to be a community of smart traders that know what they're doing. And so that's the goal. And yeah, we provide stock picks and we spoon feed here for sure. But these workshops are for the non-spoon feeding part, where hopefully those of you who go through enough of these and are here for long enough learn how to be professional traders and learn how to do it on your own. Not only pick stocks on your own, but manage them on your own so that you don't have to ask me, Stock Talk, is this a good buy here? Danny, can you post the chart? Wall Street Engine, what does that news mean? Like, you should get to the point where you can answer those questions. And, then you can be here for the community and for the picks. And then you can focus on them and manage the picks well. The people who do best in this community, I said this in the chat earlier, are the people who know how to read a chart. Now, you don't have to be a rocket scientist, basic chart reading skills, charting 101. Those people do very well because they take great ideas and great stocks and they make the trades their own. They might scalp them, trade them on a week to week basis, month to month basis, whatever, enter, exit, re-enter. Those are the people that do best in this community because they have the skills to manipulate the stock picks to their advantage and to their style. And so the biggest advice I can give any of you who struggle to follow the ideas, learn basic chart reading 101. And then you'll do great. There's a reason we have thousands of members who have been here for a long time who never cancel because they know the type of opportunities that are provided here and they're able to capitalize on them. For those of you that are just lost and don't know when to buy, and don't know what to do, learn to read a chart. It'll solve a lot of problems for you, and my workshop series will really help you do that. And whenever you come across terms in my workshop series you don't understand, guess what? You have LLMs. You guys are in the greatest generation to learn because um, you have LLMs. Anything you don't understand, just ask the LLM. It'll explain it greatly for you. So, um, yeah, I'm here to help. Happy to answer questions at any time about anything. Just be specific so I can give you specific answers. And then we'll see you guys next week for another stream. Um, we'll probably, I mean, since we're only doing once a week, most streams are probably going to be about 2 hours. I don't know if they'll be as long as this one. This one is like 2 hours, 30 minutes, 2 hours, 45 minutes. But most streams will be about 2 hours going forward so we can get through the thick of things. Um, and yeah, I'm gonna go walk Leo, get something to eat, and then I'm gonna do more research like I do every night. So I had a lot of stuff to read on robotic supply chain, some more fiber, and optical and infrastructure stuff. So I had a lot of work to do next couple weeks. I had a lot of stuff to understand. Um, and as sort of a model to a model way of approaching things to those of you who are new, you guys got to understand 95% of my time goes to research, not button clicking. I like to understand everything about the industries that I'm buying stocks in before I even think about buying a stock. If you had asked me when I was in medical school, when I was in my very early 20s, when I was in medical school, I was still trading. I wasn't an expert in anything outside of, at that time, maybe medicine. Um, Now I consider myself not an expert, but pretty damn knowledgeable on everything I trade. Electrical infrastructure, the semiconductor supply chain, nuclear energy, batteries, um, the AI industry broadly, model training, model inference. These are all concepts that I just forced myself to learn over the last 5 years because I knew where the puck was going and I didn't want to be lost. So I didn't go to school for any of these things. None of it. I just taught myself because I am not lazy. And a lot of you are lazy, very lazy. Like some of the questions I get piss me off because I'm like, why are you being lazy? If you sit down and dedicate yourself to learn something, you'll be really surprised how much you can learn, especially in the age of AI, where you don't need a library, you don't need a YouTube video, you don't even need a book anymore. Pick up an AI agent, get the pro version, and you can learn anything. Um, so yeah, I didn't do residency. No, I left. I was a third year student is when I left because I was making a lot of money trading, and I thought that I was good at it. I wasn't good back then. I am now, but it worked out. So yeah, I just didn't want to be in a hospital for the rest of my life working 14-hour days. Anyway, yeah, how about them Cowboys? Let's go Cowboys. Uh, yeah, appreciate you guys for listening, and I'll see you next week. And I wish you guys the best of luck tomorrow. Obviously, I'll post the portfolio update tomorrow. I don't know when. Not necessarily going to be at close, just whenever I have time intraday to do it. Might be in the morning, might be in the afternoon, but it's always posted every Friday. So you guys will know how the weightings have changed. Weightings have changed a lot because I dipped into margin and then, I started some starters and then I got some lumen calls. So weightings are kind of a little shifted from last week, but no positions have been removed, just added. So you can go back and peep the last portfolio update. Should give you a pretty good idea of where things are at. But either way, I'll post the updated one tomorrow. All right, guys. See you guys in the morning.